All right, so we've talked about the structure, market structure. We talked about liquidity, order flow, talked about time and price and entries. We even added we have range, right? It was not part of the flyer, but I have to hit range, and then we did top down analysis. So today we have to talk about the psychology, risk management, and also trade recap of everything. So yeah, here we are. Today is going to be a very long day. Though I had a plan of starting by 6 p.m., but unfortunately I had a visitor, so I couldn't start that. So I just have to like use the normal time. So probably in the next 2 to 3 hours, right? Maybe by 11 we should be done. So just stay here. Whatever questions you have, I'll make sure that I attend to everybody. Yeah, I'll make sure I'll try my best, and I'll make sure I attend to everybody. So I know some of you guys have your questions down. I'm coming. Let me clear my this thing before I share my screen. Okay, so I'm going to share my screen now, and then um, all right. So now here is it. So let's first talk about recap. So after that, I'll start asking questions. Whatever question you have, just raise your hand. You don't have to come to my DM. There is no way I will be teaching and I'll be checking DM. It's not possible. So just raise your hand. I will ask you, I will unmute you from here. I will ask you to speak, and then you have to ask a question. So let's first let's first do the recap. So the the all the topics we've treated so far is all the topics we've treated so far is I'm sorry, structure, structure, what is this? I don't know what's wrong. Where is my network? I'm coming. Let me look for somebody, maybe like a timekeeper. It's a timekeeper, like someone that can tell me if there is any issue with the audio, or maybe it's lagging or anything. Temi, yeah, Temi. Oh, is it the Temi I know? Okay, Temi, are you there? Can you unmute yourself? How many Temi? I saw one Temi. I don't even know the name. Okay, don't worry. I'm coming. Uh, TJ, please check your DM. All right, so uh, all right, so let's start from there. So all the topic we've treated so far, I think there are about 7 or 8. Market structure. We talked about liquidity. We talked about order flow. There are a lot of things that are not on the flyer that I have to. Okay, let me just copy and paste it since I have it on the channel already. So there are a lot of we talked about that it was not on the flyer. I have to like I have to edit it here. So so very good. So here is everything we have treated so far, and then uh let's start with the structure, then we move to liquidity. Now, during the class, I said market structure is very important because market structure is like what gives you direction, right? Like if you understand the market structure, you can know where the market is going. You will know if the market is bearish or bullish. And then it is just like it's just like building a house. If there is no structure, if there is no plan of it, you won't know where to even start from. So that is why you need to understand the market structure. And then market structure consists of three types, but there are two major ones. We have the bullish market structure, the bearish market structure, and we have the consolidating, or you call it ranging markets, right? So now the bullish market is when the market is moving to the upside. We have something like this when the market is printing a series of higher highs, higher lows, higher highs, higher lows, and all of that. While the bearish is when the market is selling, lower high, lower low, lower high, lower low, and all of that. So during the market structure, we talk about the internal range liquidity, external range. We talk about the internal range structure, external range structure. We talk about what else? We talk about the change of character, the shifting market structure, and what else? Yeah. So the first thing is we talked about is the internal and external structure. So the internal structure is your higher high, higher low, which they serve as like the swing structure. Your higher high, higher low. That's the external. Why the internal had the pullback? Because for price to print from this high to this low, price has to what? Give a pullback, a sell. And that process of pullback, it is another structure on its own because price will have to move like this in form of this for price to give you the pullback. If price wants to continue buying, price will also do this to give you that continuation that will lead to a break of structure. So that is all of this one you are seeing, they are the internal structure, right? So until our previous high is broken, that is when we can confirm a valid low. So then what else again? This is the external high, external low. For price to give you that pullback, price has to give you what? Internal structure. We have to do something like this before price will break structure. So how do you know a valid market structure? A valid structure is any structure that is moving from internal to external. Because I've said it that for price to move from this high, from this low to this high, price has to give internal structure. So this is it. If this is our market structure, like the normal, this is the basic. This is what you know. Like this is the textbook this thing diagram. But in real life, like in real markets, if you go to your chart, it's not going to look like this. It's not going to be as clean as this because that is why some people get confused. It is going to look like this. We are going to even have markets. No, it is going to look like this. Sorry, it's going to look like this. Let me remove this and this too as well. All right, so it's going to look like this. As in the real market, it's going to look like this. Sometimes price will even do all of this, then eventually we break structure. Price will even do this like this, then we can even do this. All right, so in the real market, market structure is going to look like this. Right now, this does not mean now this is where some people get the idea of change of character. Whenever they see this break of structure in the opposite direction, you know that when I mean opposite direction, you know price has been breaking structure to the upside, price has been breaking structure to the upside, price has been breaking structure to the upside in one direction. Now the opposite is, price is breaking to the upside. Now when price start breaking to the downside, price has broken structure in the opposite direction of this up. Price is not breaking down. So they now see this as a change of character. Meanwhile, this is not a change of character. I've said it that this sell now is now what? Is a pullback, because in the real sense, if you want to join the whole structure together, it's still like the basic. It's still like the basic. You are going to still move from this, 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 and this. So you can see that it is still the basic. The difference is that the pullback has to happen because price has to pull back to do three major things. I said it during the class, right? For those that remember, I said price has to pull back to do three major things. One is to what? To sweep liquidity. In form of what? In form of internal range. Internal range liquidity. Then two, to what? To fill gaps. In form of what? That's the FVG, fair value gap. Three, three. Okay, I even said it. Just go and go to, if you're on the public channel, go to the public channel and check based on the last trade I took on. I can't remember the trade. So yeah, on the last 100. So if you check what I wrote about it, it's still the same thing, and I said it during the boot camp. So I said something during the boot camp. Three major things. One is to fill gap. After gate, you can go. Two is to what? To oh, that was a mistake. I'm coming. Okay, we need to retest a premium or discount pricing. So that is the last one. So to retest a premium or discount, right? To retest the premium or discount pricing. So now that's the three major reasons why that those pullback have to happen. So this pullback here, this is not a change of character. So this is price coming to take out internal range. All of these pullback, they are internal range liquidity. So price came to take them out then before we started moving. So along the line, this might even contain a fair value gap. So price at that time, price will use the opportunity to fill the gap. Right, price will use the opportunity to fill the gap and to retest the premium on discount pricing when we start talking about range from this low to this high. So price came inside of a discount before we continue buying. So at the end of the day, we finally broke structure. This is the valid break of structure to the upside. You see, all of this one, they are not the valid break of structure. They are internal break of structure. So this is what a change of character. Why did I say there's a change of character? I gave a very simple definition of a change of character. A change of character, it is a temporary change in trend. Temporary, it is not something that is permanent. So absolutely, this is a change of character is correct, but the reason why I said you shouldn't see that as a change of character is that some people will not make the mistake of seeing this as a change of character and they want to start selling from every of the supply. They want to start selling from every of the supply. They want to start selling from every of the supply, and price does not work that way. Right? If price has fulfilled the objective of this pullback, these three objectives, if price has fulfilled them, one, to sweep internal range, two, to fill gaps, which I talked about, three, a discount pricing. The next thing is what we are going for, the external. So what happened? All of this, your supply, they get taken out. So we are going to give what? A break of structure, valid break of structure to the upside. So all of this one, they are internal break of structure. Why did I say they are internal? Look at what I drew out here. Now look at what happened here. Price gave another break of structure to the upside. Then we started selling to the downside. So we broke below this low. Then we broke below this low. So these are what? Internal liquidity. These are internal range liquidity. Then this low, this should have been the external. You'll be like, oh, but this low swept liquidity, broke structure. So it should have been protected. Right? But at the end of the day, price took them out. Price took it out. You might see this kind of market condition. Sometimes you will see this kind of thing where price will move like this, and the low that was supposed to be protected was taken out before we break the next structure. So this kind of thing usually happen, and then here is the reason. That is why I said that except a low break structure to the upside and a high takes out internal range liquidity, they are not yet valid. So look at this low. It took out internal range liquidity. It broke structure to the upside. So it was supposed to be a protected low. But price started selling and price took it out in form of internal range liquidity. Now, when I was teaching liquidity, I said every highs and lows, they are liquidity. And liquidity is being transferred from one high to one low. Right? It's there in the video because this is it. Let me explain based on what I drew out. So let me use this. Price moved from taking this high in form of liquidity, came back to take out this low in form of liquidity. We bought to take out this high in form of liquidity. Right? This is what I'm trying to say. Price is going to move like this. We are going to come liquidity, and before price will do that, we are going to have series of pullback. This is it. So we took out liquidity. So from this point of liquidity to this point of liquidity, back to this point of liquidity, back to here. So if there is any liquidity along here, we are going to come take them out back here again. So that is why price, you should always focus on price doing this, because price has to move from one point of liquidity to another one, back to another one. And that is what keeps the price moving, right? So if price took out this liquidity, we move to this liquidity, now we move to this, and we took this out, there is nothing wrong with that. The market structure is still very much bullish, because at the end of the day, this low stands as the internal range liquidity. Now, I've said it that whenever you want to look at your structure, always look at the structure like this, right? You expect price to take out internal range liquidity back to external. So this is it. We came back like this. So we took out internal range liquidity back to, now when price got here, sometimes you will see price reacting from a supply, right? You look at price wants to sell, but at the end of the day, price came, took it out, and then we broke structure to the upside, then giving us what, a break of structure. So this is price moving from internal to external. So this place is not a change of character. The market is still very much bullish. So this is what you need to understand about market structure. And when it comes to liquidity, there is nothing much complicated there. In that liquidity, I explained the buy side and the sell side, why it is called buy side and why it is called sell side. Now, the way we were taught how to trade before, I'm sure that most of you guys learned this strategy or this system of what is called a support and resistance, where price bounce like 2 or 3 times, then people start selling from there. Now, if you go to your MT4, there is an option aside from your buy limit and sell limit. There is what is called sell stop and buy stop, right? For those that know how to use it, most people don't use it, right? Some people don't even know how to use it. But sell stop and buy stop is, let me say you want to buy a particular currency, you want to take a buy trade. So in a buy stop, when you want to set your buy stop, it gives you the opportunity to set your buy ahead of the place that price is going to buy from. Let me give you an instance. Let me say this is a support, this is a resistance. You are expecting a breakout of this resistance. You know, break and retest now. When price break out, you're expecting price to retest it and continue buying. Now, in your buy stop, if you're expecting the breakout, the buy stop, you can set your buy stop here. In the sense that once price gets into your buy stop and price trigger your buy stop, if price continue buying, you will be in profit, right? And then that's just how buy stop works. So you can set your buy stop ahead. You can set your buy position ahead of the place you want price to buy, right? You want price to continue buying. So you can use buy stop. Now, in our scenario now, that is where manipulation comes in. And I've said it that manipulation is not only about the candlestick wick. When I mean wick, W-I-C-K, like wick. It is not only about wick. You will say that sometimes manipulation, price can actually manipulate a zone with a full body candle. It is going to look like a break of structure, but it is not a break of structure. It is just a manipulation. Now, in that kind of scenario, this is it. This is a zone of resistance. People are trying to take a sell from here. They want to take a sell from here. I'm telling you, not only the resistance traders, even the smart money, probably they have seen something here in form of a breakout structure to the downside, then they are seeing this as an inducement. So they want to take a sell from here. Now they are trying to take a sell from here. Support and resistance, resistant trader, even the smart money, everybody's trying to take a sell from there. Now, another thing there is that aside from the people taking a sell from there are people that they have their buy stop. I've explained what buy stop is above here. So that once price break out of this resistance, their buy stop is going to trigger and price continue buying and they will make money. Now they are going to have their buy stop a little bit above here, and the the people trying to sell, the resistance trader, they have their sell limit here too, buy stop too. Everybody is trying to take a trade from that zone. Now once price get there, price is going to trigger the entry of the sell limit. You are going to be in little profit, then take them out. Now, that process of price taking them out, it is going to trigger the entering of the stop. So if price gets into here, give a little bit of reaction, it takes out the people trying to sell from here. Now, at that process, price trigger the entry of the buy stop, then that manipulation happen and then boom. Now, in this kind of scenario now, the stop loss of the sellers are being taken out, then the buyers too, that they have their buy stop here, they're entering got trigger, and once price reverse back, their stop loss is being taken out. At the end of the day, this manipulation happens. Sometimes the manipulation can even happen with like 30 to 40 pips on Euro USD. That is a lot of pips actually, but you see it like in form of a full body candle, like a candlestick close, not about weak. So now this is a very clear example of what liquidity run. Right, this is not a break of structure. Now, liquidity run and break of structure is that when you have liquidity run or liquidity sweep, immediately price took other liquidity. We know that this is a liquidity sweep, but in a break of structure, if price breaks this low, you will see price continue moving in that direction. So you will know that this is a break of structure. But if it is a liquidity sweep or liquidity run, after that manipulation happen, you will see a reversal to the upside. You will know that, oh, liquidity is being taken from this low. And if a liquidity is being taken from one low, we are going for another. It could be internal or external. What am I trying to say? Now, look at it here. Liquidity run happen here. Now, we are coming for another zone. Now, we are not going to come in a straight line. I've already said this before. Price move in waves. We are going to have something like this. And eventually, we took out this. So, move from this liquidity A to this liquidity B. Now, after that happen, where next are we going for? Now, you might be like, this is another liquidity. Yes, but what of all of this one? They are still liquidity which you should consider, because price can just move like this and take out maybe one or two of the internal range liquidity, and then we continue sell to the downside. Liquidity too has been taken. It's not just about this I. So we move from A to B, and at the end of the day to C. So I'm going to tag this as what? Another liquidity run. Which another liquidity run. So in this kind of scenario now, this is a very clear bearish market structure after a manipulation. So this is a manipulation, then we continue selling to the downside. Now, what I'm trying to say is that from what I was trying to explain before in that bullish structure, this I now is what? It swept liquidity, right? It broke structure. Very good. It should be what? It should be our strong eye. Your strong eye is the eye that sweep liquidity and break structure in the market direction. Strong eye. Why the weak one? The weak low, this weak low is the one that prints the strong eye. For those that know, these are just basic definition. Now, if this is your strong eye, this should be the protected high. In your bearish market, the high should be protected, the low should be taken. The high protected, the low should be broken. But even though this eye is protected, this eye is the strong eye, at the end of the day, this eye is still a liquidity. It is still an internal range liquidity within this eye here that happened after the manipulation, and any low that price start giving, any low at all, because at the end of the day, price can still come and take it out and still sell. It is not because now this is what I'm trying to say. Now we are going to have something like this. We are going to have something like this, right? And then we broke structure to the downside. Very good. Now, from what I've explained, liquidity to liquidity, so we move from A to B, now to C to D, then E. Where is E? We can tag this as our E. Then this has the F. There are still liquidity. Then let's tag this as the G, which is the new liquidity. Now, if price starts buying to the upside like this and take out the E, which is another internal range liquidity, yes, definitely where should be the next place? External, because price move from internal to external. Now, what I'm trying to say is that sometimes you will see price doing something like this, in the sense that price is going to now move back to any liquidity that is being printed here, and then we are going to start buying. In this kind of scenario, you know that, oh, price is going for the G, which is this I, this ISI from here. Why? Because when price took out E, price refused to come for this low. So what has happened here? Shift in market structure. It is called SMS. Shift in market structure. Shift in market structure is that in a bearish structure, the low was not taken. So if the market is bearish here, price was supposed to move from this E to here. So price was supposed to move from internal to external. But now you can see price did not take out the external. Price started protecting the external. Then we started buying to the upside, coming for this G. So we have a shift in market structure, which indicates that price is trying to buy now. This buy does not mean we are now bullish, because price could take out this G in form of still internal, and then we continue selling to the downside, and we completely take out this. This is our market structure work. This is the you need to understand that market structure is not only about higher highs and higher lows. If structure is about higher highs and higher lows, you will be stuck a lot of time. Because if it is about higher highs and higher lows, this is lower high is a bearish, lower high, lower low, lower high. Why is it that price came out to take out your lower high? Your lower high should be protected, not taken out. So if you understand that price moves from internal range liquidity to external range liquidity, price move from one liquidity to another. Even your break of structure, it is liquidity taken. If price break any structure, liquidity is being taken. Liquidity is not limited to sweep. It's not only limited to price breaking out a high with wicks. Liquidity can be taken with full body candle close, and then we have a clean reversal back. So you need to understand how price move from one point of liquidity to another point of liquidity, and you need to understand when price change structure. Change of structure is not about change of character. So now I've talked about, then we talked about range. Now if you understand everything I'm trying to explain here, your range high should sweep liquidity break structure, your range low should sweep liquidity break structure. Simple. It's still the same thing. Your range high should always sweep liquidity break structure. So if you have this, sweep, break, sweep, break. So this is a range from this high to this low is a range. So I actually dropped a YouTube video where I talked about range. I think it was last year video. So you can go back to watch the video again. I will drop the video again, the YouTube link again on the channel. So you go back to watch it. It's about range. So this is how you want to mark at your range. Anywhere. Even it is at the middle of the structure. Anywhere. So far you see a sweep and break the high, another sweep and break the low in the opposite direction. It is a range. Anywhere you see it. So we are going to go back to the example. Now we talked about POI. So I said that POI, okay, order flow. Order flow is just you understanding how price move from liquidity to liquidity. That's the order flow. Order flow is understand that price, because when you understand that price move from internal, is the next flow of price is to the external. So now we talked about POI. So I said it in the POI that POI is not only limited to supply and demand. The POI, your POI can be fair value gap, your POI can be breaker block, mitigation block, key levels, a lot of it, anything can be your POI. Support, resistance, there are still some people POI. They are area of interest. And I've said it that having a POI does not mean price has to respect it. It is a POI. It is not a do or die affair. It is a POI. If price did not work out from it, then you let it go and you try to see what price is trying to do. But some people, when they have a POI, they totally get lost in that POI that any small reaction from there, they start taking a trade. Let me say they have a demand now. Any small reaction, they will take a trade. Price will come back, take them out. Any small reaction again, price wants to start buying. They will still take a trade. Price will still come back, take them out. Not knowing that inside of that demand, they are lost in that. They are lost. I don't know. It is like their mind is clouded that price has to buy from there. They will not see that price is printing bearish structure inside of that demand. All right. I think I saw someone sent a chat to me on Euro card. Yeah, I remember very well. Euro card, he was trying to buy from a demand, and any small thing, price just swept this and broke this, and he started buying from here, seeing this as a change of character. Meanwhile, this is price moving from what? Internal to external inside of your demand, and you are not seeing that. You are only seeing confirmation. Confirmation entry is not about sweep and break, because at the end of the day, when you have a supply from here, and price tap into it, and you are waiting for your confirm, right? Price tap into it, price sweep like this. No, this is what a sweep. Then some people will now wait for inducement, right? Now this is it, and then they want to take a confirmation entry from there. I'm not saying that this is not going to work out, but you need to understand that this is a range on its own. From this low to this high is a range, and there is a probability of price coming. Then we go for the external. So this one you are seeing as a change of character here like this. It is not a change of character. It is price taking out internal range liquidity of this range. You can check good examples on the previous price, the last month's price action on Euro USD and GBP USD, when some people are trying to buy, where you can clearly see that the market structure is very, very bearish. So you have to understand that your POI is just a POI, right? It is just a POI. And there are other things you have to put into consideration before choosing a POI so that your POI will not always fail, right? Like you put your market structure, your liquidity order flow before you not your range too, before you not choose a POI. So now, I said it that I always like my POI should like to align with something. Let me say I have a supply now. I always like that supply to align with something, maybe a breaker block, or that supply should align with maybe a fair value gap from the other side of the market. But I'm going to show an example of that. So that will make it, like more high probability for price to respect it. So I talk about time, price, and entries. So when I'm talking about, I have to join it together because anytime I'm talking about time and price, I'm basically talking about entries because the reason we are using time is to get the best entry. And then since I've been trading Euro USD and GBP USD, I've said that time and price is not applicable to all the pairs, especially when I was checking out gold. I see that most of these good entry I even are giving out during Asian on gold. So time and price is not applicable to every pair. But since I've been trading Euro USD and GBP USD for some times, and I trade US 30 and NAS 100 to nowadays. So these are time really work on them. At also time I want to be on my chart. At also time I want to do this, I want to do that. Now, when I talked about top-down analysis, and I talk about days. Now, days, I mean days of the week, like Monday, Tuesday, Wednesday, Thursday. It is not everybody that actually see this as something important. I'm going to tell you, everybody have strategy, and then everybody's strategy is unique to however they see it and however they trade. Now, even though we say we trade smart money concept, it is a concept, right? In the sense that everybody can learn structure and liquidity, but it is not a must that we have to trade the same way. I can give two smart money trader to analyze gold at the same time. The first person might be seeing a sell, while the second person might be seeing a buy. And even though I give three, the third person might see nothing, and you'll be like, I need to wait, right? The thing is that we trade structure and liquidity, but we see the market differently, right? Now, why am I saying this is that, let me give you an instance. Look at this structure that I drew out here now. Some people might see this buy on time. Their understanding, their advanced understanding of this structure, they might have seen that, okay, this is a sweep or not really a break because of maybe one thing, maybe when during the session, I gave a very good example on Euro USD. When I said that, for those that remember, I said that all of this structure I drew out here that look like a bearish structure, all of this might even be an internal structure from the higher time frame bullish. So the higher time frame might even be like this, and this might just be a pullback. I mean, all this say you are seeing might just be internal structure of the higher time frame. So at the end of the day, it might be that the higher time frame is bullish, while this one that we are seeing now is just bearish. So some people they saw this and they know that, oh, the market will likely continue buying because the higher time frame is bullish and the price is done with the pullback. But another person might not want to take this. Still structure and liquidity trader, they might not want to take this. They might just say, oh, I would rather wait for intent in price. Now, this is it. The intent is that you want to wait for one supply to fail. Now, this is a supply that fail because there is a supply here that sent price to the downside that took out this low. So now it failed. Now, this is where they want to get into their own buy from. So it is not that it is just like this kind of your own understanding, and it all depends on experience. It plays a major role in this thing. So now when you're talking about time, I use time a lot because at certain time, even these days, I don't really trade London. I don't know, even my London in the morning, I prefer to do other things. I come during the New York stay throughout the evening till London close. I prefer to take trade that time because that is the time I get perfect entering on US 30 and NAS 100 based on what I have studied, what I have seen, and the trades I have taken so far. So top down analysis, I talk about the days and candlestick formation. You see, our basic knowledge of all those candlestick, morning star, evening star, engulfing, doji, all of those basic things that we read from candlestick trading Bible, they are very, very important. But some people actually don't pay attention to them. As simple as those things are, if you can understand it and add it, especially from the daily and weekly, how did last week candlestick close? It is going to determine the next. You can actually predict how this month candlestick is going to close if you understand this candlestick formation. I've said it a lot of times. In fact, most of the time I will even predict that okay, I'm expecting monthly candlestick to close as an engulfing. Look at the way Euro JPY candlestick closed yesterday on Friday. It is very obvious. Now, look at the momentum during New York. What other things are you expecting based on the structure and liquidity? After price took out internal, we are going for the external. So it is obvious that price is going to close as an engulfing candlestick. Now, in that kind of scenario, I don't want to start jumping into a sell from a supply, because obviously price is closing inside of my supply. So now these are things that you can put together to make up, like to make those things make sense to you. So that is just it, guys. Let me start taking the questions now. This is just a recap. So when I start taking the questions, it will give me the, oh my god, I have thrown a lot of this. Okay, it will give me the opportunity to like go back to okay, to like go back to I'm coming. Okay, three fourths. I thought I deleted this drawing, so I thought I deleted this. Okay, let me use this particular place for it. All right, so um, this is example of this is a study that I've been doing for some time on US 30, and you can see how I mark out the dates. This is not indicator. This is manual. I have to do it myself, right? You can see how I mark out the day, take note of the time, the day, Wednesday. I have to put the day it happened. I mean, when I said I don't trade on Monday, every like I wish to say this, we cannot trade the same way. Even though we trade the same thing, right? Our understanding, our brain, the way we see things it will not be the same. Our mindset is not the same. So I don't trade on Monday. I have my reasons because I just see Monday as a preparation for the new week. I get best entry Tuesday, Wednesday, Thursday, even Friday. I don't really pay much attention. And you can see from the back testing, even this one that happened on Friday, you can see I was even stopped out. So most of these entries it is because of I had gone back, look at it over and over. Okay, so now let me go to this thing. There are how many people here? There are over I'm coming. Okay, 272. So if you have any question, I've spent 1 hour on that. So the remaining 2 hours is for Q&A. So if you have any question, please raise your hand. Please raise your hand if you have any question. All the people that are raising their hand, this thing is down, 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 down. All right, while waiting for, as people are asking questions, I'll be talking about risk management. There is a quote I saw. Was it today? I think I put it down somewhere. Yes. So he said he said capital is the lifeblood of a trader. Without blood in our body, like we have blood has to continue flowing in our body to make us a human, like a living being. So capital is like a lifeblood of a trader. Protect it fearlessly, grow it patiently, and risk it wisely. So it's just something I saw, I just came across to. If you don't have money, you cannot, you will, except you want to be trading demo for, no, I mean, forever. And with in demo, you cannot withdraw. So if you don't have money, as small as it is, even $10, you cannot trade. And let me tell you the truth. If you don't trade, you will not get experience. If you don't gain experience, you will not be a better trader. Nobody wake up one single day and start trading that same single day and started making money that same single day and have all the experience that same day. It's not possible. You have to trade to gain experience so that you can become a better trader. And if you keep blowing your money every time you trade, then that's going to like mess you up. I am talking from experience. It's going to mess you up totally, because at the end of the day, you will start losing that courage that you have in yourself before. So, let me start from, okay. I saw. Please, just once I call your name, unmute yourself. Make sure that there is no noise where you are. Please and please. Okay, let me start. Barney, I'm going to call your name like 3 times. If not answer, I'll move to the next person. Barney, you are allowed to speak. Unmute yourself and speak. Barney, whatever. Barney, are you there? Barney. All right, so I'm going to move to the next person. Um, uh, Royalty FX. Are you there? Royalty FX. Royalty FX, are you there? Is it a All right, so I don't think Royalty FX is available, so I'm going to move to another person. Oh, Royalty FX is speaking. Is it my mic? I can't hear you. Ah, TJ, please come to my DM. Can you hear him? Is it from my end? Where is TJ? All right, they said it's your mic. I don't think it's from my hand. Royalty FX, please fix your mic. But this person is Team C David. Team C. Can you say something? Team C, are you there? Team C.
Yes.
He's not even speaking. All right, I'm going to move to another person. Bunny is on here. IB, are you there? IB that has this tomato emoji behind your name. IB, are you there? You're allowed to speak. Just unmute yourself and speak. IB.
Hello, good
IB.
evening. Can you hear me? Hello, good evening. Can you hear me?
IB, are you there?
Yes, I'm here. Can
IB
you
is
hear me?
speaking, but I can't still hear him.
Oh,
Is it from my end?
can you? Hello.
I think it's from your end.
Can you hear
Yes, I can hear you. I can hear you clearly.
TJ, please? Can you hear IB?
I can hear you clearly. Hello.
Can you hear him?
Hello.
Oh, I guess it's from what happened again? Oh, I can hear you.
Hello.
But I can't hear anybody. Oh, I'm coming. Please give me 1 minute. Okay, I think I fixed it in the wrong port. Let me change the port. Okay, no wonder. All right, IB, are you there?
Yes, I'm here. Can you hear me?
IB, say something.
Can you hear me? I'm here. I'm saying something.
Yeah, I fixed it in the wrong spot. I can hear you now.
All right.
Yeah.
Thank you very much for the
All right,
class.
so you
Really
can ask your
appreciate it.
question.
Okay, so my question is about structure. Like, I understand when you talk about the new range and the recent range, but my major question is when market has given you a new range and a recent range, and maybe the structural range is bullish, what move do you want to see before you know that the structural range has changed to bearish?
Okay, so you are saying the structural range is bullish. So if this structural range is bullish, this is the structural range. How will you know that the whole structural range has changed to bearish?
Yes.
Am I correct?
Yes.
All right, please, you can mute yourself. Let me answer the question first. Mute yourself. We have another one and after that. So now this is let's use I'd like to use the chart now. Enough of the okay, very good. Let's use GPPJPY. Yeah, this was the example I even used yesterday, Abby, on Friday. Sorry. Now look at this structure now. This is a bearish market structure. No, let's start from when the price started buying because I was able to get in to sell from this leg. And how did I know? Now, when the market was buying, I took 2 buys from this buy here. You can see that price broke structure to the upside. And then the whole structural range from here. I'm sorry. Let me go to higher time for like 2 hours. The candlestick is too much. All right, so you can see that price broke structure from here. So this is what? External low, right? External low, external high. This is the last low. This was the last low that took out internal range liquidity. You can see we have taken out internal range liquidity and we broke structure. Very good. Now this is the high that came back and took out internal range liquidity again. So we have a low and we have a high. Now I was talking about range. I said anywhere you see that thing, that sweep break is your range. It doesn't have to be extreme. When I mean extreme, it doesn't have to be from here. It could be from here. It could be from here. It doesn't have to be here to here. No, that is not how range work. Now, in this kind of scenario now, look at it here. When price was selling this pullback leg, I said the pullback leg is bearish. We were mitigating supply. Right? We started mitigating. Now, this is a very good example of manipulation. Look at it here. Support, resistance, they want to sell. Sellers have their sell limit here to continue the sell from the resistance. Buy stop trader, they want to continue buying. Their entry is a little bit above. Their stop loss is here. We had a push. We manipulated everybody. The people selling from here, their stop loss was taken. The people buying from here, their buy stop entry was triggered, and we reversed back everybody. That is a very clear example of manipulation. Now you can see that this is not with weak. How many candlesticks? We even have about 6 to 7 candlesticks clearly close, and some people will see that as a break of structure. It is not a break of structure, it is just liquidity run. After we ran liquidity above this high, we started selling, giving that pullback. Now, in fact, when GPPJPY, GPPJPY and EuroJPY is the pair that I trade very well with US30 and US100. So I check them every day. When they started selling down, my whole expectation was that we are even coming to take out this move because we are moving from what? Internal to external. That was my expectation. And when we get here, all of a sudden we got here. What do we have? We started, when price started selling, we were mitigating supply. Even when we were mitigating supply, we were moving from internal to external. Internal to external. Internal to external. Internal to external. Something like that. We were moving from that same internal to external. Then my expectation is that internal, external, that we are coming for here. But you can see this supply here that was supposed to send price to the downside to break structure did not do that. Instead of that, we started buying and we broke above it. This eye here was supposed to be our strong eye that swept liquidity and broke structure. But you can see we didn't even break it. We started buying and we give what? A change of character, a temporary change in trend. This is indicating that we are trying to do something. The three things I mentioned: to sweep liquidity, to fill gaps, and to what? To retest a premium or discount pricing. So we started buying. Now, the thing here is that in this kind of market condition, if you understand structure and liquidity, I've seen a lot of people, they go and do something like this. They will not do something like this and do something like this. Now, me, I used to tell, in fact, any of my students that send this to me, it is something I totally, now, somebody was like, when I first talked about this, the first time, like 4 months ago, when I first said this, and the person was like, this thing actually work. And I was like, no, I am not here to depend or rely on possibility. I am here to look for consistency. I am here to look for something that's consistently work over time. I'm not here to say, oh, this is possible, this is not possible. You cannot risk your money on something that is possible or not possible. You want to look for something sustainable, something that when you see that it happened, like you want to look for something that has like that play out a lot of time. So now, if this is possible, but I don't want to do this. Now, why will I even do this in the first place? Number one, if you understand structure, this leg did not break structure in the first place. This one leg, you should understand that we didn't break this low. We didn't break it. We didn't break. All this one you are seeing, they are internal structure. They are internal structure of this move. This is the external high. This is the external low. This is a range like this. This is what I'm trying to say. This is a range like this. So this leg did not break structure. Any supply you are trying to take a sell from here shouldn't come like this. It should come after. Now, instead of that, when I mean after, you should wait for something for price to tap into it, and then you are going to trade from the new structure. You should take the sell. Now, it is the new structure that will tell you that we are coming for this low. Why? Because if this low now refuses to break this high, this low is not going to become what? A weak low. If this low refuses to trade above this high, it is not going to become a weak low. And when you start having a bearish new structure, that will indicate that we are coming for the weak low. So now, you don't want to do this, you don't want to do that. Instead of that, this place that price change character, I was focusing on the internal structure. What I was just doing is I was expecting one manipulation, just one. When I mean one, this is internal structure 1, internal structure 2, internal structure, external structure. Price will come, manipulate any one of them, and continue buying. You want to continue, you want to trade continuation, not reversal. Some people don't even know when they are trading reversal. You don't want to trade against the trend. Price gave a change of character to the downside. It is just, if you check what is happening on US 30 now, this is a very clean example. US 30 has been selling sideways to the downside. When I mean sideways, we are selling like this. We are doing something like this. Go and check. We are doing something like this, sideways to the downside. The next thing I'm going to expect is a manipulation. Even though price is going to continue the sell, I don't really care. I just need a manipulation of 1 or 2, any one of the highs. How will I know that after this one we sell? Or after the second one, we sell? Or after the third one, we sell? It is, how will you know? The only way you can know is the new structure. It's the new structure that will tell you that now when we have something like this and you expect, now, price is going to take any one of them. You see, that new structure is what you want to trade. You want to trade after manipulation, right? Now, we have lows, internal. Now, everything from here, I also look at mitigation too. Everything from here has been mitigated. We mitigated it, so probably this is going to be the last one. You can see there's KML, I'm not sure. I think support on resistance. This was an area of support. We thought resistance, something like that. I'm sure that there's going to be a reaction from there, but I don't really want to look at this because this like did not break structure. So now I'll be expecting a manipulation of a low. Now price started selling. Let's see where price is going to. A manipulation of a low, just one low, right? Just one low. We have not taken out the external yet. Now if we take out the external, is another story. So Now we still have about this low, still internal. All of them are internal. Now we took out external. Very good. Now after we took out external structure, I'm coming. Let me clear all of this. Now that we have taken our external structure, we still have all of this as internal. Look at it. You have to understand your mitigation too. Look at it here. You can see how we tap into here, tap into here, tap into here. What else is remaining there? I'm seeing nothing. Right, this low, it is the major internal range, which I'll be expecting price to come at. This low here is the major internal range. Now, if you don't want to choose your point of interest, remember what I said about point of interest, that it has to align with something. Now, look at it. Where I said this supply field, order block. This last sell leg, I want you to look at something. This last sell leg, this 1, 2, 3, 4 bearish, this is a last sell leg, right? That broke this structure. That was why price reacted from it. This is a supply. It failed. That place here, that place there, where we started mitigating demand, we had a mitigation of demand, and then boom, this is an unmitigated order block from there. It is unmitigated, it is an unmitigated order block. So you want to, that is the area, you can see that it's aligned with that supply that failed, that order block that failed. So that is the area you want to choose you want to choose a play to continue the buy from, right? After that manipulation, after the manipulation, you want to wait for that manipulation to happen. So this is, we help you understand that price move from internal to external. So now, though we have a fair value gap, this is going to be like point of interest 1. Now, I love to go to higher time frame a lot, right? Because sometimes taking that sniper entry, it is not about going to 5 minutes. I want you to understand that taking that sniper entry is not about going to 5 minutes. You can get that best entry even from the higher time frame. So in year 2 now, I'm going to look for order block. Now look at it here. Now look at this here. You can see that from this 4 hour, we have actually tapped here. Here that was saying that we have not tapped into, we have tapped here. Now you can see that this candlestick tap inside of this gap too. We feel the gap before we move. Now look at this order block. 1, 2, 3. If you know the definition of order block, when I talk about POR, I get the definition. I think I even sent the screenshot to the channel. The last sell leg before this upward move. See the momentum, see the fair value gap, see the inducement. And when I was, for those that when I used to talk about breaker block, I've said it that the mitigation of a breaker block or a fair value gap, it is an inducement into your order block. This is it. The mitigation of this fair value gap. The fair value gap is going to work out, definitely. You can even see that the fair value gap has an inducement before it played out. Now, the mitigation of this fair value gap, it is an inducement into your order block. And then, here is a supply, very clean supply, unmitigated, with an inducement, right? Very clean supply. Now, this is the order block. This is the last sell before this buy. So, this is an inducement into this. It is an inducement into that supply, into that demand. Sorry. So I might not really consider this. Now, using the range, I've said it that the range does not have to come from the extreme, right? The range does not have to come from the extreme. If you look at this range now, it is still lying at a discount, but it does not have to come from the extreme. Anywhere you see your sweep and break in the opposite direction, the 2 direction, this is a range high, very good. This is a range low, very good. And at the same time, I will still take this as a range low. This is where we had the last sweep and the last break. So now I will be looking at this place as the first point of interest to continue the buy from. Now, why will I want to continue the buy? Like I said it, that external high has been taken, external to internal. So now from the very question you asked, you were asking that how will I know that price has changed structure? Now look at it. How will I know that my swing structure has changed? Look at what price has been doing. We kept on buying. You don't want to start selling this kind of market condition. You want to keep buying. Let me increase it to 10. You want to keep buying so that it will be fast. You want to keep buying. So now, you will see, now, we finally broke above this high. right? What will you do again? Internal to external. This is internal. This is internal, but I will look at this, right? That is order block. That's an inducement and everything. So you still want to continue your internal to external before so before you know what next to do. Now let's continue. What's happening? Now we broke another high. Same thing, you price has to take out internal. Even though you want to continue buying, price still have to take out internal. You broke another high, and then look at this candlestick here, right? Look at that candlestick. It was the last place where the supply fell. This is a zone of support. This is a zone of resistance. Sorry, we had the first touch, the second, the third, the fourth, the fifth. So we broke above it. Manipulation has happened. So we still came back to take out internal. Then we are moving back to external. So in fact, then I was expecting price to come all the way down here, but at the same time, I could see that you can see that year two price has mitigated this demand, mitigated this demand. Demand was in control before price took out this high. So price kept on mitigating demand. We mitigated this demand. So we mitigated this demand. So this is the last unmitigated demand from there, right? So before we want to continue the buy to the upside, now we want to do same internal to external, then we move back to the okay. Let's see now. Look at what is happening now. You can see that we did not take out this external high. We did not take out this external high. What do you think is happening? Okay, internal to external, we didn't take it out. Why do you think we didn't take it out? Now, this is already showing some kind of bearish structure. So it is going to be inverse. So this low is not going to become a weak low. Why? Because this low did not break above this high. You can see that we have been bullish. Our structure has been bullish. Let's see if price is going to take out this. Liquidity to liquidity. A, this was supposed to be B. Now, A did not take out B. So we move from A, then this is another liquidity. Now let's see if price take that out. After this, we move to this. That was really fast. So we broke structure to the downside. Now, this is already showing you that we are having a bearish intent. We are trying to sell to the downside, probably to do something, but this is already showing a bearish intent. A very clean bearish intent, and you can see our price reverse back into the supply. We continue selling, and even though you were not able to get the sell. Now, I used to say this, that there is no trophy, there is no award for catching a trade from the extreme. I mean, from the very place price starts. If you have a system that said that you have to wait for price to do this and this and this, then wait for it. If your system, if your strategy does not support you taking this kind of trade like this, left for me, definitely you can never see me doing this. Right now, if your strategy does not support this, good and fine. If price is ready to sell, because at the end of the day, you see this old buy that happen here that look like a break of structure. If you go to daily time frame, it is just a liquidity sweep, right? It is just like a manipulation. And then look at all the candlestick formation. Look at all of this interaction inside of all of this candlestick. All these are liquidity. No single liquidity was taken out from here. Price was moving like this, like sideways move. So price is going to come, take out 1, 2, 3, 4, any one of them. So you can see we started from this blue that refused to break above this high. Then we move to this. Then we are going to keep moving to this. Now, this is how I used to know if price is going to change, because I am going to wait for price intent. And we have to wait for price intent, and then we took out what? Inducement. Then we came inside of a supply. This is a supply from the higher time frame, but it's a fair value gap from the lower time frame. But it is actually a single candlestick from the higher time frame. So I will wait for price intent. So this is already showing what? Bearish intent. So what did I have to do? I will continue same thing. Internal to external, internal to external, internal to external. Why? Because price is trying to go and do something. Now, I will never not even advise, I will never teach my students to do this. The reason, instead of me to do this, I will wait for price to tap into it and give me a new structure, internal to external, which is going to indicate that we are not coming for this high. So meaning that this will now become what? Internal back to what? External. I used to say this because the day I understood that trading is personal journey, right? You can have someone you are learning from, a mentor. Now, I always used to say this, paying for a mentor. I've known people that paid for lot of mentorship. Paying for a mentorship, everything all still drive down to you. It does not guarantee trading profitability. It is still about you. So you want to always do something that is right, something that aligns with what works, not what you see. There is difference between what you see out there. There are a lot of people that will even post this MT4 without even really taking the trade. That we post the trading view. Sorry, that will post this trading view chart like this without even taking the trade. You don't want to trade based on what you see. You want to trade based on what works. How will you know what works? What you have tested. So if I tell you, me, I don't do this, I'm not telling you you shouldn't do it. Just go and test it. There is reason why I don't do that. I prefer to patiently wait for price intent. If I, though, based on how I trade, I was able to get the first GPPJPY sell from there because of candlestick and because of days. If you check, the same happened on Thursday, which I was expecting price to print high of the week. So I took the sell and my TP was somewhere here because now we are still bullish. Now, this was what I remember this particular price action because we had a session on Monday on my Discord and we were looking at GPPJPY and I asked that this is what I used to say, that even though 3 people learn from same mentor, you will still end up seeing different things sometimes. Now, I asked some of them to give me analysis on GPPJPY. Now, this is very correct, internal. In fact, our expectation was the external, which is the way I see the structure. Now, when price started giving this reaction from here, so the thing there is that you can see that what a supply here failed. There was a supply that price tapped into, sold down. When that supply sold down, it was supposed to break structure to the downside. I mean, the supply was supposed to come like this and continue the sell. But instead of that, it did not happen. Instead of that, we only swept liquidity from here. Let's go to lower time frame. You see what I'm trying to say? We only swept liquidity and we started mitigating demand. So what do we have? What happened here? We broke structure. So what happened here? There is a mitigation from here. So at the end of the day, we had a point of interest choose from here. We had a point of interest choose from this other block. Look at it here. There was another block. Look at this last sell candlestick before this upward move that broke this hand. You can see that there is a tap into the supply. The supply was supposed to send price to the downside, but instead of that, it sent price into a demand. Then we push and broke structure to the upside. So there is another block from here. If you really, in fact, this is a very good entry. After this, this is an entry trading based on this order block itself. You can take this entry. But now, after that has happened, we saw all the mitigations that happened. So this is an inducement. We are still using the order block. And then the TP was here. Right? Because my expectation is that I was still expecting price to still go for the external. But now, after price got there, there was a kind of reaction from there. Right? What do we have? There was a reaction from there. Now, when price started selling from here, we have a breakout structure. We have another breakout structure. You can see there is a supply from here, inducement from here, and then we push to the downside. And then we broke the low. Now look at it here. We pushed to the downside, and then we broke this low. So now, what is this telling you? Do you expect me? Sometimes all you just need is one loss, like for you to, not even a loss, like one POI to fail for you to know that this structure is no longer bullish, right? Since this buy did not work out, we took it out. Now this is very obvious we are coming for this low. Why? This low is now a weak low. Why? Because it did not break this high. We didn't break the high, right? There is about, I think, a 12-minute video I recorded explaining the structure, how I was able to like get the bullish. It's not even about fundamentals now. It's just about technical analysis on BTC. The buy. Now I'm going to drop the video in the bootcamp this thing. It explains structure in details. How price move from A to B to C. Liquidity. This, we didn't take this out, so we took out this. We came to this, then we took out this. We come for this. We are coming for this. All this thing has liquidity. You might actually overlook it. Liquidity is not about one high, one big high, or one smooth high. This is liquidity. This is liquidity. In fact, this is liquidity. Everything candlestick is liquidity. So this is not showing what bearish intent. I don't want to start buying. I don't want to start doing this again. And if this low is being taken, there is nothing here for price to mitigate. Look at it now. Everything here has been mitigated. There is nothing. Now, this is the only thing that I know that price is going to probably mitigate. And I've said it that even though price get there, I am still not going to take a direct buy from there. Instead of that, I will wait for price intent. Price intent is not a confirmation entry. Now, when I make confirmation entry, confirmation trader is going to wait for this. Now, this is not a price. This is what confirmation trader will do. They wait for a sweep. They will wait for a change of character. They will wait for an inducement, and they want to buy, seeing this as a confirmation. This is not price intent. As a matter of fact, what you see here, it shows that price is still very much bearish. Because if you understand structure, you should see this as a whole range. Right? You should see that as a whole range. So you are going to look for a way to get into this from the premium. Because price is not going to come and do this. So this that they are taking as a change of character, it is price coming to take out internal range liquidity of this high and this low. So this is a confirmation entry, not price intent. Now, you want to wait for price intent in the sense that after price do something like this, you want to wait for something to fail out, a break above this here, and you want to start using the new range. Any range, again, you move to the upside, any sweep and break, you join it together, you look for the range. Now, after that, that is when you want to take yourself. That is when you want to take yourself from. Anyhow you want to take it. Now, even though price is going to buy, right, after this happen, this is where you want to start taking your buy from. I've posted this on X before, 2 entry model type A and type B. So I'll look for the image and drop it again. So from everything I've talked about now, at least this should answer some people's question. Right? It is not that if you know that your question has been answered from what I've talked about, you just you don't need to ask again. Yeah. Gods alike. Is it gods alike? No, gods like or something like that. Please speak. Speak. Okay. Let me move to Williams. I don't know. Wow. Williams. Are you there, Williams? Williams. All right. I'm going to move to the next person. The Rock, please speak. You're allowed to speak.
Yeah,
The Rock.
I'm speaking.
Okay.
Can you hear me? Good evening.
Yeah, Williams. Good evening.
Okay, my question is kind of psychological question.
All right.
If you have a target that maybe you have a weekly, monthly, a weekly or monthly target, then on the weekly target, maybe on the first or the let me just say the second trading day, you smash your weekly target. Is it advisable like to maybe start risking small for the next trading days remaining, or you just stay off trading for the week?
Unfortunately, I would say you are right. You are asking a very good question from the wrong person because I don't do this weekly target of the thing. But I'm going to like just tell you some things based on not really. Okay, wait. The weekly target, is it about money, monetary aspect, or about trade? I don't understand. Is it about the money?
Yeah, yes, that like
Okay.
maybe kind of maybe you are
Uh,
compounding something like compounding accounts. Yeah.
okay. Compounding and use. I don't really know, but God, you see, psychology issue is something that you have to search within yourself and try to understand yourself. So, let me give you an instance of maybe there was this time I have this rule that state that states that I should not take more than 3 trade in a week because I have to like because I was kind of over trading then, so I want to like look for something to counter it. So and then I started trading higher time frame. So I now set the rule, right? So that I will not over trade. That's why I have to set it. So that rule helped me to stay patient that okay, even though I did not take trade on Monday, I don't have to like FOMO. Like I was having issue with fear of missing out, so I tend to jump into trade. At the end of the day, I used to overtrade. Now that is kind of a time because there was a time when I started understanding this thing. Then then I was trading 4 pair. Then one time like that, and I saw a trade on GPBJPY. I saw a trade on 3 pairs, same day, Wednesday, right? And it was very close to the end of the week, so it was easier for me. So I decided to like split the risk and take the three trade at once. And the ones that goes the one that did not go. Now, when you talk about that target, let me say for instance now, I now saw the three trade on Monday. Yeah, and I saw the three trade on Monday, and my target is I should not take more than 3 trade. After, if I let's assume I took those 3 trade and it ended up as a win for me, I've smashed my weekly target, right? As someone coming up then, I will not take another trade because I want to follow my rules. I want to follow my rules so that it can help me stay disciplined. But if you have grown to some certain stage, you see, this thing is about growth. The way you are last year shouldn't be the way you are this year shouldn't be the same way you'll be next year, except you are not really pushing yourself really hard. So if you have grown to some certain stage, you should know that okay, even though you smash that target, let me say on Tuesday, if you can still do it, then you can do it. But if you know that you are battling with discipline, you are battling to stay disciplined, or you are trying to like achieve something, then stick to that rules. Right? Stick to the rules. Mark Douglas said something in his book. He said, be no, is it be flexible, be rigid with your rules and flexible with the expectation or something. Yeah, be flexible with the expectation and be rigid with your rules, meaning follow your rules strictly. At the same time, don't expect much, like be flexible with the expectation. So if you know you are trying to stay disciplined in this thing, you are trying to achieve something, and he said your weekly target is 2%, and you made that 2% on Tuesday or even Monday, that is good. You are done for the week. Next week you go again. But if you have gotten to some certain stage where you know that okay, you won't have excess another account or excess money, or you still want to do it, good and fine. You can do it. And if it ended up as a win, good. If it ended up as a loss, you should know the next step to take. Is either you go back to your rules by sticking to that target, or you still want to continue doing it like that. But one thing I would just advise is that try to follow your rules. Stay disciplined to it. If it says 1% in a week and you achieve it, close your laptop for that week. So I'm not saying you should completely stay off the chat, but at least close it for that week. You understand?
Yeah. Thank you very much.
Good guy. You're allowed to
Hope,
speak.
hope
Okay, who is
you are
speaking?
recording. Sorry, I'm asking if you are recording,
Yeah,
so you can still watch. Okay.
sure.
Thank you.
Good guy, you're allowed to speak. Good guy. Okay, good guy is not there. Let's move
Good,
to the
good
next one.
evening. Good evening.
Who is that?
It's Namdi.
Jane,
Okay, good guy. Okay, you are speak. Yeah, you can speak.
man, it's about this trade. This one that you drew in this support line, no resistance
Hmm?
line. This one over here, this resistance
Yeah,
line.
yeah.
This place. I'm assuming that we are to take this trade from this buy that swept this liquidity.
Mm.
How am I going to enter those trades? Because this is like full replay now. We don't know. Assume that we are to take it. We will know that at
Mm.
this trade it will be in ranging. So if we were to take the trade, how will we do it?
Which one is it? If I'm to take this buy from here,
Yeah, from this place now.
I have just take it now. It has internal range. I mean, it has this is it.
No, not
So
there,
I'll
not
take
there.
it
This
now.
place. No, this
Where?
place from this range over here.
Seriously speaking, I don't know the place you are talking about. I'm coming. Let me just clear my chat. Okay, where
This range.
is it? This buy? Yeah,
No, my other side from your left hand side.
a buy or a sell?
A buy.
Oh my
Yes,
that side.
down here. This one that swept liquidity.
This one.
No, yeah, man.
And there's no way you can annotate here. Okay, if you
No,
can,
no,
are
no,
you
not
with
that
your
place, not
chat?
that place. Yes.
Are you with your laptop? Can you just put it and then send it to my DM? Let me see. Like go to GPJP1 and draw what you are trying to say and let me see.
No, I'm
Can you do
using phone.
that?
I'm not with PC. I don't have PC.
And you can screenshot it. Like just do the annotation and screenshot and send. I don't know what you are trying to say. A buy, the place that swept liquidity. This is the place that swept liquidity. I don't know another place. Where else? We had a sweep here. Not really that kind of clear.
Go a
And
little
this is
bit
a
closer
resistance.
down. Yes, I'm talking about this place. No, yes.
This buy.
The buy. Yeah, the buy that broke the supply. The one that
Okay.
sponsored
Okay.
everything.
Okay. This buy here that broke this supply, this high here. If I'm to take
No,
the
this
buy,
one. No, my the one that started everything.
what else? Yeah.
Yes, man. Yes.
Okay. If I'm to take the buy, how will I do it? Is that what you're saying? Okay. This is I've explained this thing before that there was I was following mitigation, right? I was following mitigation, so I saw that this is the extreme, right? Now, price is not coming inside of the extreme. We started mitigating demand. We mitigated this demand. Then we mitigated this demand. Now, out of all of this thing, this is the only point of interest that has an inducement that swept liquidity and broke this high that also took out the supply. So that is why the point of interest was respected. So you can see even this entry after the now look at it after we took out this internal, yeah, we came back but we did not take out this eye, so this eye will be the weak eye. That was why we continue buying. So if I'm to take this, yeah, I would have taken this if this is a current market condition, but I didn't take this one. The one I took is on Euro JPY, same time, but I didn't take this because I don't want to take two trade same day. Right, so I took this buy on Hero JPY, not this. Let me show you. The one on Hero JPY was kind of very clean. The one on Euro JPY was very clean. This is the one on Euro JPY, very clean. See this last supply here. This is the last. That was the last supply. We broke above the high. So this is the order block from here. This order block from here is an inducement. So this is the one on Euro JPY. So I don't know, maybe I answer your question. Good guy.
Yes, my answer.
Let me move to the next person.
Good evening, ma. I'm trying to ask a question. Good evening.
Who is speaking? I don't know. Who is speaking?
Namdi.
I can't even see you. All right, what's your question?
Okay, good evening, everyone. Okay, so my question is kind of a psychological question. So,
Please speak louder. I can't hear you very well.
Okay, can you hear me clear now?
Yes, it's clear now.
Okay, so my question is I mean, like when you are in that stage of your trading whereby you really know your setup and you know the kind of you have your trading plan, but sometimes you find yourself taking trade that is not even in your trading plan, and you know clearly that this trade does not align with your trading setup, but sometimes you just try FOMO in the trade, and later when you just click that buy or sell button, that's the
That is
thing in which
when
you
you will
realize
now
that
realize, okay. And that is like talking about FOMO, like something that does not align with your rules, but
yes,
because you
and
have that, you
sometimes
just
it's
want to
even
trade. I
taking a
can
lot
hear
of
you.
trades. Yes.
Mm. Yeah. That's what I was saying, that it happens to me. Right? Everybody have their own experience. Everybody all start as a newbie. Even the best trader in the world, out there, they have a point in their life that things happened. So um, there is this mindset. There is this thing that always come to my head. I don't know. It is something I have put in my. That's why I said that mindset is very important. So I always tell myself that MT4 or your MT5 is not a playground. It is not just a place you will enter because you don't know. If you see some people trade history, oh my god. I am somebody that I am always very cautious, and I'm very careful about my trade history. I don't take much trade. I don't like messy trade history. I like my trade history. If I'm going to be, I like consistent risk. If I'm risking 1%, or if I'm trading, I trade profit. Like, let me say I'm trading $50,000 profit account. I'm mixing 1%, which is $500. I always like all my loss should be that $500. So, I mean, because I don't see my MT5 as a playground. I don't just see it as a place I will open and I will just go and take anyhow trade. Right now, developing that mindset, I have to go and create rules. The any I don't know how to put it in this thing, but the how will I put it? A community that has no rules has no sin. If you don't have, the reason why trading is kind of difficult is because when you break your rules, there is nobody that will beat you. Nobody will ask you why. I mean, this is just something that you can do it. You can just do it anyhow you want. And but if they tell you, let me say if somebody tell you that price has to tap into a zone, price has to break structure, price has to do this before you take yourself. And if you do not follow it, there is a fine. If you do not follow it, there is this thing, there is this thing, there is this thing that will happen to you. You will be careful. You will not want to break the rule. But at the same time, if you keep jumping when you talk about FOMO, it is something that I have. In fact, it is something that I've battled with for a very long time. This is a point where you want to sell. Now, the thing there is that I saw price coming there. Oh, I will not take it. Why? Because I'm scared. I don't want to lose money. Now, price now get there. And I started seeing that reaction. Let me say price now go somewhere. I will not enter here. By the time I entered from here, where will I put my stop loss? Now, if I say I should not put my stop loss here, if I have entered here and put my stop loss here, I will have just lose that $500. But if I enter here with that same, the thing there is that you will want to use that same loss size. You don't want to use small risk. If I now enter with that same loss size, putting my stop loss here, I will not be seeing $1,000 instead of $500. But because I've seen this kind of thing, I will now have that confidence that price is going to sell. Let me leave it. At the end of the day, price might still come. I take it out and I will lose the money. Now, you have jumped into this trade from here. The question is, why not set limit in the first place? So that was why I created another rule then. If you are at this stage, there are some stage you will be. That is why it is not everything you see on social media that you have to put in your head. Don't let everything get into your head. Some people give advice based on the stage they are. You cannot tell me that somebody that is capable of risking $10,000 per trade, the kind of advice based on risk management the person will be giving might not really align with you that you are risking your $10. That is why in trading, capital is still important. So now the thing there is that it is not everything you have to put in your head. Some people will say they don't set limits. They will never do it. Some people will say they will never use instant market. Some people will say they will always set limits. Everybody with whatever works for them. But you, that you know what you are going through, you know what you are battling with, you know you are trying to be consistent. Why not try it out? Why not try something that is going to help you and see? It is just a matter of time. So then I started using, because then I saw a post that say when you set limit to miss trade, it's a lie. I started using limits. If I did not set limits and price get into my entry, I will not take that trade. Right? Yeah, it is very strict. If I tell some people this is one of my rule, they will be like, come on, you have to be, no, I don't want to do it. This is my rule, this is what I want to follow. I want to overcome this FOMO. So I started setting limits. Now after that, I started giving myself time. Meaning, if I want to analyze a pair before 2 minutes, I'm done. No more. I spend sometimes I can even spend the whole of Monday London session is for preparing for the week. I mean the whole of 4 to 5 hours. Monday London session, I use it for preparation of the week. Even till now, till date, by tomorrow Monday morning, by 6 a.m. I'm awake. I usually have morning session on my Discord. After that, I stay to prepare for the week. I mean, I don't just come anytime I feel or anyhow I feel. This is what I do, and I take it extremely serious. So if you want to try something that you want to do, you are battling with something, you just have to try things out. So try setting limits. After that, set rules that will help you overcome this thing. Set rules like you don't want to trade. You can even give yourself time. Like from this to this is when you want to trade. The market is endless. It will always. That is another mindset I have to put in my head, that if I miss a trade, that is not the end of it. That is one thing that used to cause FOMO. Because if you miss that trade, you will be like, oh, I have missed this trade. You will now start jumping, and price will come back. You will go out, price will sell, you will enter, price will... I mean, why are you doing all of this? If you miss the sale, it is not the end. Is it not me that missed a buy from JPY from... So, I got into another trade from here. I got into another trade from here. Opportunity will always come. So you have to develop a very disciplined mindset. It takes determination to overcome this thing. Fear of missing out. Fear of missing out can make you make no single progress. Like you will just be there and you will feel like, oh, technical is not the issue. Some people, technical is not even their issue. Technical analysis is not their problem at all. You cannot tell me you have been coming to your chart for 2-3 years and you don't know what sweep and break and some things are. Like, you just have to work on your mindset. You understand me, Williams? Abi, who is the person? I don't know. So let me move to the next person. Okay. If you have any question, you can raise your hand. We still have I can still spend 30 more minutes. Ade, is this Yoruba? Ade Mike Abi? Ade Mike Abi? Is that Ade Mike? Or why do you write it together? Ade Mike? Are you there?
Good evening, Aart. Hello, good evening.
Yeah, Ade Mike, you can speak. Please, David, please wait. Ade Mike, speak.
I am speaking. Can you hear me?
Yeah, I can hear you.
Okay, good evening. Thanks for this boot camp, and may God bless you with more wisdom, knowledge, and understanding. So my
Amen.
problem. Are you with me?
Yes, I can hear you.
So you just said something now about some people's problem is actually not technical. It could just be a little
Yeah.
thing as risk management or knowing the proper timing and all. So to be honest, I've been in this space for a while now. I'm not even proud of being in this space and till now it hasn't come to. It even got to a position. Someone told me to get a mentorship. Like, I was telling the person sat with me. We analyzed the charts together, and the person was like, "Oh, he does not even know half of all this when he started taking the risk and seeing small funds in." But it just felt like maybe I need a mentorship or something to just click in. So the problem I also have is sometimes when I study, for instance, watching videos like this, though I'm not using um, trade view, the trading view premium. So sometimes I use go charting and all. So when I study, sometimes everything becomes clear. I understand all these things, but sometimes I don't know if it happens to me alone or maybe other people are going through. Then when I get to the chart, everything just becomes
Art.
clumsy, and
Yeah.
I just feel like one moment I get it figured out, and the other moment
You go back.
I go back and I'm just like, God. And in that way, it even makes me enter depression sometimes. And I feel like I thought I was getting this thing, and the mood swing sets in and all. So sometimes, so
Okay.
most of the time, I would even set my, let's say, just like you said now, whereby you use Mondays to prepare and all. So Saturday, Sundays, I can just take 3 PS to play with, and especially PS that correlate, and um, do my analysis on it, do my top-down analysis, mark up my structures, everything on the charts, and just waiting for them to play out. And most of the time, they actually play out. And I was just looking at it like, oh, I'll wait for it till when it gets it. Then I will be looking at it till it gets to the next swing high. And once I enter, hoping to be going for the bigger structure, that probably the market is going to the bigger structure, probably going back to the daily time frame. I will feel like, oh, the market is still bullish. The market wants to do a pullback, and I enter from that pullback swing, and so I'll be looking at it like I will look at how the market will trickle to where I want it to get to. Then out of
And
fear, I
you
will
not
enter.
enter.
I don't want to. Yes, I don't want to enter. Then out of nowhere, I just feel like, oh, let me be bold. I will enter. Then the market starts going against me. Then when I now lose that trade, my eyes now open. I now feel like, oh, I was not supposed to enter here. I was supposed to wait for this structure, to fill
Okay.
this gap and all. So that's what I've been going through lately. Everything looks clear, and
Okay.
sometimes when I come to the chat, it just becomes clumsy again.
Just something again. All right, no problem. You know, and for what you said you have spent like you have spent sometimes in this space, like maybe like some years now. So and
Yeah,
you know, sometimes you me, I don't really when some people even come to me and be like, I've been trading for 4 years. And the first thing that would just first come to my head is that okay, I don't really compare, right? But I'll be like, that's time you first started, do you really give it that attention? You are really counting it as 4 years, right? But that first year, even the first 2 years, even the first 3 years, some people might not really pay that much attention. Maybe the last year, they know about trading, oh, they know forex, oh, they know candlestick, oh, but they are not consistent. They don't really come to the chart maybe once a week or twice a week. They are not really that consistent. Maybe during the last year, that's when they will not stay consistent, and they'll be like, no, I've stayed in the space for 4 years. You cannot really put in those years that you were not consistent. Right? Now, the time that you start, please mute your mic. The time that the time that you start being consistent. Now, you come, you get it this week. So that's you see some people make profit this week. They ended up losing the profit the other week. Another week, no, they are not really that consistent uh trader. So now, here is the thing. Um, I have always believed that for every problem to exist, there is a solution. And then, um, because you are going through something now, does not mean it's the end of it all. There are people even going through more than what you are going through. And then, that is why, um, no matter the stage I even get to, or even where I'm coming from, there are some things that I don't really joke with. I might not really be good in some things, though nobody is perfect. But with the information I have, I don't even take the information as much. With the little information I have, as even outside the Forex space, other things, business, finance, psychology, mindset, I love to, read books to educate myself to grow more. Now, in all of this, everything, for somebody to even write those books, most of the books that we go and buy and read, right? For them to write it, do you think they just wake up and start writing it from their head? They have to start from somewhere, which is like to pinpoint some things, journal some things, get some things, put it together. So after they now put those things, they can now write a book out of it. That is why journaling is good. Aside from Forex, aside from leave Forex, even in your daily life. I mean, in your daily life, everything you do, it is not really about everything like waking when you wake up, you write it down. No, I don't mean like let me say you go out today, you meet someone, you learn something like a diary, something like that. Try to write it down and now put it into Forex trading. Be serious with writing things down. Writing, I'm not even talking of online journaling. Take your pen, take your book and write. Right? Write it down and when you keep on that, if I there was a time I even shared some page of my journal with on my Discord. I think these are journal of some years back, like no, not really years back, like maybe last year, yeah, maybe. And they saw the way I even like write it, the way I was writing it as if I'm talking to somebody, right? As the way you are expressing yourself to me now, I will express because I don't really have anybody to ask all of these things. I will express myself and the mistake I made and the things I'm going to do next. I know that it's not going to click once because when you tell yourself you will not do this, next week you will find you ended up doing it again. That is just it. And when when you are conscious of what you are doing, when you know that, oh, last week I told myself I won't do this, and you are doing it again, you are conscious, like, it is not really easy. I know it's not easy. You just have to force yourself. If you tell yourself, I am only risking 3% this week, and unfortunately, something happened on Wednesday, the 3% you ended up losing it, that should be the end of the week. I know it's not easy. A very clean, fine trade might show up on Thursday morning and you will be tempted to take it. That is just it. Now, if you know, now at the end of the day, let me assume now you took the trade and it ended up as a loss. Now 4% for the week. Another one now show up. I'm basically talking about my experience. This is even a life experience how I lose a life account around April last year. A life 100k funded account. Now I ended up fixing it. Now I'll be like another trainer show up that same week. And I'll be like, oh, okay, let me just take this. No, this will be the last one. I'm sure this is I'm going to recover the loss. Now I started thinking of how to recover the loss. I ended up taking the trade, a loss. And then I lost the account. This happened to some people, a lot of people out there. And like I used to say, nobody is perfect. Nobody, absolutely nobody. That is why we take losses. If the best trader, if most of these guys are really, really that perfect, then we should not be using stop loss now. If you know that, any point of interest you choose, price, you definitely buy from there. Why stop loss? Right? Now, that is why you just have to journal your trade, journal how you think, your emotion, everything, write it down. After that, you review. If you journal without review, it is useless. If you are journaling without reviewing what you journal, it is absolutely, I don't even see meaning in it. When you write down something, at the end of the day, come back to it. At the end of the week, come back to it. At the end of the month, come back to it. You review it. If you see that what I wrote down, that I say I will not do, you ended up doing it again, why do you do it? There must be something that leads to something that is going to lead to something. Something will not just come from nowhere. That is why I used to believe nothing is random, even aside from the chart, right? So you have to learn to journal, review, and then those are the things you will use to create a rules. Creating a rule, writing down, like this thing you are trying to explain now, everything all drive down to discipline. This week, you saw a trade that is going in your direction, probably you are not scared or something. At the end of the day, you out of nowhere, you now finally enter. That is when price should now reverse. Why don't you enter from the beginning? If your rule said that you should enter from the beginning and you don't enter, and the place you are not entering is not the place you should enter, that means you are breaking your rules. But if your rules state that you should not enter from the beginning and the place you enter is where you enter, I see no reason why you should start feeling bad, because this is you just following the rules you lay down. Creating a rules or writing down a rules is very simple. I can just wake up and say that this week I'm going to reach just 2%. It is very easy for me to say it. It is very easy for me to write it down. Put it to action. That is the difficult aspect of it. Now, at the end of the day, even that 2%, I might lose it on Wednesday, on Tuesday. We have Wednesday, we have Thursday, we have Friday. I will not be thinking of how to make that 2% that I lost back, forgetting that I said I will not risk more than 2% for that week. Some people, it is after everything happened, that is when their eye will clear. That, oh, this thing I say I will not do, I ended up doing it. So, it takes time, right? It takes time. Don't always feel bad. Learn to forgive yourself. It takes time. Be calm. It might be as something, because I heard you were saying that you play around with some pairs. Sometimes it might even be just you reducing the kind of amount of pair you trade. Try trading 1 and see. Try trading 2 and see. You don't have to trade 7. Try trading 1 and see if you can really do it. Right? Try trading 2. I've tried this thing before. I have tried it. I've traded just 1 pair before. Euro USD. Just Euro USD. Right? But at the end of the day, when I see that, okay, there is reason why I have to add another one, then I added another one. But if there is no reason, I will continue with it. You just have to try things. So, the person, I don't know the person that asked the question. Ade Mike. So, one thing I'm going to tell you is, if you have not been journaling your emotion or everything, try to journal it, review it, make a rule, and stay disciplined to it. Right? If you know that you get it this week, you did not get it next week, that means that you are able to get it this week, you that you're able to make money this week, then you should be able to make it next week. So why don't you make it the new week? What happened? What went wrong? That is why you need a journal. You understand me, Ade Mike? Ade Mike, are you there?
Thank you very much. Yes.
Yeah. So I still have some time, so I said I'm going to really spend a lot of time. Who is that? Okay, oh yeah, you can ask David.
Okay. My question is just like about studying. Sometimes you see like people saying they study for 10 hours, or like, let me use you as an example. You said you did a study marathon for like 5 hours.
Yeah.
That 5 hours, what did you do? Did you just backtest? Did you just solely backtest for 5 hours straight? Or what are the other things you did? What in your study?
Okay. This is there is most of the question that most of you are asking is, I'm very, very sure these are things I've actually discussed with guys on my Discord, because me, I'm somebody that whenever I'm talking about technical, I like to like talk about psychology along, so that they will see that this thing is not magic. When it comes to studying, yeah, you see people say, I study 10 hours. I don't know. It all depends on what they are doing. But one thing is, me, I cannot sit down for 5 hours straight. It's not even, I can't even do it. Me, I know myself, I can't do it. So that 5 hours is the time I use on the chart. So now, because inside of that 5 hours, I will take break. I will stand up, rest, come back. In fact, inside of that 5 hours, I might even like go and eat and come back, something like that. So now, studying and backtesting is not the same thing. I dropped a video on studying on my YouTube channel. Backtesting. Look at the meaning. You are testing out something that you know. That is backtesting. Studying is you trying to learn something that you don't know, or you trying to get more understanding of something that you know. So in backtesting, you have something that you want to backtest. You already have a strategy, you already have a model, you already have a pattern that you want to go back to price and see if it works, if it does not work, something like that. Studying is you going to the charts. Now, let me give example of okay, no, let's use the US 30 I'm talking about. Yes, no, US 30 now I was using. Now, this is US 30, and then okay, sorry. Am I still sharing my screen? Yes, I think so.
Yes.
Okay, so this is US 30. Um, okay, no. This is me studying. I'm not really backtesting here. No, if I want to do like a real backtest, I don't do like this. If I want to do backtesting, I journal. I journal with it. I don't just like just draw it out. I journal, right? I think I've shown there was a video I did very, very long time ago, and I was showing people how to like journal when they backtest. I'm sure it's on the channel, but I can't remember. This is still on the channel. I have over 100 videos there, but I'm sure I did it and I dropped it on the channel. So I was showing how to journal when backtesting. When you backtest, you journal. You don't just backtest and be playing your. Some people will just click on this thing and then the thing will just be flying and be flying and be flying. No, that's not how it is. It is done. You journal along with it. Now, in the studying, let me say I am studying. In fact, most of the time when I get to study, I don't really use bar replay, right? Now, look at it here. Sometimes I play the price action ahead. The reason why I'm using bar replay here is so that it can allow me to go back, like it can allow me to go back the price, like go back very well. Right now, sometimes I play the action. I play the bar ahead. Now, this is what I mean ahead. So this is what happened here. Now, look at what happened here. Now, I'm trying to study things here. So I saw it that okay, here there was a breakout structure to the downside. There was a reaction from this supply. Price swept it in form of an inducement. Price tapped there on Tuesday, London. I am sure that a lot of people might have taken this because it happened on Tuesday, London. And then their expectation will be like, okay, they want to continue selling. To what? To the downside. To what? To take out this low. But you can see, unfortunately, we didn't take out the low. We printed an inducement and we tap into this. Now, the first question I used to ask myself is, if this is a real market, would I have taken this buy? And to be honest, the reason why you did not see the diagram there is that because, to be honest, I won't take it. Right? Because this is not really a kind of clean sweep I was looking for, though it did happen because it is very, very easy. Look at it here. Look at it here. Right? I see that it is very easy. Equal low. Very clean equal low. So it is very easy for price to move from here and come here. So instead of that, okay, this is me studying. I wouldn't have taken this. So I understood everything that happened here. I understood. You can see we now tap here, we bought and we took out the supply. The people selling from here, we took them out. Then we printed it. Now, after that, look at what happened. Now, all of this reaction from here, I won't take it. This is what I used to tell you guys that I will not take. Look at it. All this piece has been mitigated. So I won't take them. But you can see what now happened there. Price tap there. Definitely no entry yet, no inducement. But you can see after that, we printed an inducement. Now, this is where I will take the entry. That is why you see this thing there. So what this thing you see, meaning I've passed there actually. I guess I'm around here now. I've passed there actually. Now, this is where, so even though I did not take this, absolutely no problem. If I did not take this, no problem. But this, I will take it. You can see inducement and we get into this. Where you can see this is the place where the supply failed, demand got in control, and this is demand. This is me just studying. I don't really need to backtest. I mean, I'm going to play the candlestick ahead. What I mean ahead is that we allow the candlestick to do whatever it wants to do. Then I will now go back and start, after it has done whatever it wants to do now, I will now go back and start marking, okay, we had a sweep, we broke here. Why did this happen? After this reaction, what happened? Now, after this reaction, what happened? So, have a market. Sometimes I label it. You can see focus on the continuation. I label them, right? Don't buy at this demand. Why? Don't buy from this demand. Sorry. Why? Right? Why is it that I will not buy from the demand? Obviously, because this demand here, we didn't really break above here. Because when I went to higher time frame, this is a manipulation, not really a break of structure. Price gave like something like first candle, second candle, third candle, and swept to the downside, something like that. So, but when I'm backtesting, I don't want to see what has happened. When I'm backtesting, I take it one by one like this, like using one by one. Then I'm going to tell myself, let me clear this. Let me show you what I'm trying to say. Now, if this is me just backtesting, okay, in backtesting, the first thing I will do is, okay, maybe I'll wait for price to break structure first, right? If I want to continue the sell. Now, because there is going to be a reaction from this demand, because that demand swept liquidity. And then we didn't really break above the high, we didn't break above it, but there's going to be probably a reaction from there. Now that we have gotten there, if this is a live market, what will I do? Now, if this is a live market, price tap into here. Price got here on Wednesday in the morning. Very, very, very nice day. Wednesday in the morning, London session on Wednesday. We are definitely going to give a push to the upside. And if price now gets to somewhere around here in the New York on that same Wednesday, I will sell. The reason is because even without the break of structure, now experience, that's why I used to say experience, because if you are still battling with some things and you are still battling to stay disciplined, you can definitely set those strict rules that you have to wait for the break. If no break, no entry, you can set it very good. It is you trying to discipline yourself. But me now, I have seen this kind of price action. In fact, it's this thing happened 2 weeks ago on US 30 to this same US 30. And then you can see that first we didn't break above this high. We swept liquidity, we broke below this low. Though this is price coming to take out internal range and we can call for the external. But after internal range was taken, we did not go for the external. Instead of that, we started selling, giving this kind of bearish structure. See, you can see that we tap into a supply from here. We tap into a supply from here, and then eventually we printed order block. Order block. Look at it. This was the last buy. This two red candlestick is the last buy candlestick before this downward move that broke the structure that swept liquidity. Order block. Now, inside of that order block, we had a pullback. If in this kind of thing now, I can go to like lower time frame. We had a pullback. First liquidity, second liquidity. Where is the order block? Let's even go to higher time frame to choose that order block. Now, this is the order block. You can see continuation, like mitigation. This is the order block. So timing is now the thing I'll be waiting for now. Timing, okay, very good. We now broke it. Even though I said I'm going to take the 7 without break, now we broke it. So you that you are waiting for the break of structure, good and fine. After we break structure, look at it. There is a place price is going to buy from. Price will not just, even though I'm trying to sell from here, price will not fly there. Price has to come from somewhere. Now, I was talking about something that happened here, right? I was talking about something that happened here. There is a supply there. There was a reaction from a supply there that price reacted from. And then what happened? We failed. Now, inside of there, we are having lot of reaction, a range. You guys know what is called a range? I think there was a time I watched this Phantom video when he was talking about, I've forgotten the name, but it's kind of a range where you have a push, you have a range, and you have another push. So what it's going to do is they are going to sell from here. Now, this is still same thing with supply and demand, because at the end of the day, inside of this range, you are going to see a sweep, you are going to see something like this, a sweep and a break. So you are going to wait for this, right? Because that place is the place that broke structure to the downside, it swept liquidity. So vice versa, like bullish, if you turn it upside down. So there was a kind of a range from here, and then I don't, in this kind of thing, definitely me, I will not do something like this. Okay, for those that really understand the way I trade, I won't do that. So now, wherever price wants to buy from, the only thing that can make me to buy is when I start seeing buy intent. Now, some people I might even see this as a change of character. Let me see, I can't really remember what happened. So they might see that as a change of character. Oh, you can see price not even get to where I wanted to sell from. But price took out the first place here. And then, so if I'm back testing, this is a missed entry. I will record it as a missed entry. And then, what time did price get there? You can see price got there Thursday, 4 p.m. New York. We got there, that same Wednesday. Sorry. So we used the whole of Monday, we used the whole of Wednesday, London to do all of this. Then New York towards evening, we got there and that same Wednesday. So confirm high of the week. What do you want to do? I am not expecting much buy again. We want to continue selling. Now, why is price selling? You can see we even bought from this range. We bought from the range, so why is price selling? To take out internal range liquidity? To fill gaps, remember the three things: take out internal range liquidity, that's the first internal range liquidity, second internal range liquidity. To fill gaps, these are fair value gaps. The third one, the range. So where is going to be your range? Yet I've said it, this is going to be the first one I'll be using. If that one fail, then I'm going to use this and this. So we are coming for the what? For the discounts. We are coming for the discounts. So now, this is me back testing. I'll record it as what? As a mixed entry. But if I am studying, I have already played it. I don't need to rack my head and know what happened. I don't need to rack my head and start. If I am studying, next time, how would I have engaged in this kind of sell? If this is where I was looking out to take a sell from, price is not going to get there. Look at where price got into. You can see this range I talked about, like a push. We had this kind of range, then we had a push. So inside of that range, if you go to lower time, if you go to more like to see it better, we had a sweep. Not really that kind of clear, but we had a sweep and break. But that is the place where this last demand field. And the reason why price sold from there is because there is an inducement very close to it. So I would have taken this if it is next time study. But if it is backtesting, I know that this will have me be a missed entry if I'm trying to journal my backtested result. So you need to distinguish. If you are backtesting, be strict, follow your rules, look at it before you place your buy and sell tools there, and be strict with it and journal. But if you are studying, you are trying to study point of interest. How will you get into a trade next? You are trying to study structure. If price break this low, where is the next place price is going to? You are studying structure. Why? When price took out this low, price was supposed to go for the high. Price is not go for the high. Why? Instead, we started giving a bearish structure. So next time when you see this, you don't want to start forcing buy from here. You don't want to start forcing buy from every of the demand. You are going to focus on the present structure, which is this bearish structure. You can see how we move from internal back to external. Let's see what is going to happen again. Okay, we continue selling. Let's see. There is no much reversal back, so I wouldn't have probably gotten into any trade from that. And I'm sure that this thing happened. See, Thursday US30 is very moves really fast. So this thing happened within that week. So probably you were not able to get in. That is not the end of it, right? I mean, you are not able to get into this. That is not the. Oh my God, that is too fast. That is not the end of it. Now let's go back. Look at something. This is me studying, right? Just look at something, yeah? Look at this place I had knocked out here. Oh, my network is bad. Alright, look at this place, this same place here, where this supply failed. You can see that there was a mitigation of a demand from here. You remember what I said about my point of interest? I always like my point of interest to align with something. So there was a mitigation of a demand from there. Now, there was a demand, price mitigated a demand from there, and then we kept on mitigating a demand from here. So this range here, I talked about this range and this range. So this place where the supply failed, there was a kind of reaction given at hidden base. So there was an hidden base from here, hidden base. If you go to a higher time frame, it might be a kind of special candle. Let me go. I'm not sure. Okay, it's just a fair value gap. Let's go to 30 minutes, 15 minutes. Okay, not really, but inside of 15 minutes, you can see it swept liquidity broke above structure. But one thing is that if you understand my teachings, you should know that if price take out this high, it is not a change of character. This is what I used to say. Some people will not see this. They will now say a change of character in this fact and they want to buy. I'm telling you that even though price ended up buying from here, absolutely no problem. No problem. If your strategy says that you should not buy from there, then don't buy, right? Instead, you wait for that continuation order flow, then you get into the trade. So if it is me, instead, I prefer to trade continuation. So the price is selling, and you can clearly see that this low did not break this high. So this low is a weak low. Price is coming for the low. All this buy that happen here, they did not break above this high. See it. So price is coming for the low. So why will you be buying from here? Even though you are going to buy from there, I will patiently wait for price intent before I get into my buy. So that is why price came inside of there. And this high was printed, okay, same Thursday. And then I guess we tap into there. What day? Friday. We sold on Friday. What time? We sold in still New York. We sold in the evening, still New York. The entry was still in New York. You can see how this place, it's aligned with this place, right? It's aligned with this place. So now we continue selling and we took at the low. We are coming for the low. So you can see this is what some people will do. And then some people will do something like this. And you can even see that before even price bought, they ended up, they were taking out. Even though price later buy from there, they were taking out. First, price took at the low before the main buy. So now, please, do you understand what I mean by studying and backtesting now? If you want to study, you don't really, allow it to play the price action. I mean, play it. You don't need to play it. Then after you play it, the reason I'm using bar replay so that I can go back now. After you play it, you start marking out why the price sell from here. Okay, price is coming from here. And we have an inducement. What time? I look at the time. What structure? Why is price selling? Oh, to take out this low. Why? Because this low did not break above this high. Oh, I've messed up this chart. There's something I've been using. Let me play it. So, let me play it. So, let's continue. All right. Let's continue. Let's move to, okay, I have about 20 minutes more. So mute your mic. Let me go to Henry Sunex. Sorry. Sunex Henry. Are you there? Who is this person? Sunex, are you there? Sunex. Okay, let's move to Baby Luna. Who is Baby Luna? Taking my time to teach and explain this, I think I said this on Friday. The people that were able to join the Zoom, I said that no secret. You see, absolutely no secret. If you ask me this, I will tell you. The reason is that at the end of the day, not everybody will take it serious. Number one. Number two, not everybody will make use of it. And even though I have experienced when some people pay for evil something and they are not still serious. I've seen it before. That is just to show that the level of the seriousness is just different. So, and some people, even with the little information you give them, they appreciate it, and it might be something that will really change their life. That's just it. So, however, I am teaching I'm teaching you how I see the market. No secret, I'm not hiding anything. I'm teaching you basically how I see the market. But tomorrow, I might see it, you might not see it. And you will be like, why is it that I did not see it? Now, that is where this comes in. Number one, the way I pay attention to it might not be the way you pay attention to it. I always talk about attention. Some people, they are so disorganized. Like when they come to the chat, they just, I don't know how they see the chat of me. I don't know. But the way me Aart, I see trading, the way I see my trading view, the way I see this chat, I see it as a job because I trade full time. I don't have any other thing. I don't do 9 to 5. I do full time, and this is what I've been doing for like a year plus now. So you can't tell me that our level of seriousness, like it will not even be same thing. Why some people it might be due to their work, maybe school, and these are things that I don't really like when someone make excuse because me myself I don't make excuse. I don't like to give excuse. So I don't like it when someone give me excuse. No matter what kind of work you do, you are working, I have worked before. You are schooling, I have schooled before while still trading, while still learning how to trade. I have worked before while still learning. In fact, I was doing this one is not even under AC that you see the other AC. Inside factory where there are machines and I just have to like manage my time and make sure I show up. Even though it's 30 minutes a day. Like you should not like you should take it very seriously as more as that time. Some people can study, can stay on their chat for 5 hours without achieving anything, but you can stay on your chat for just 1 hour and then you will see your eyes will be open to some things. Why? Because of the kind of attention you pay to it. That person that has been on the chat for 5 hours might not pay that same level of attention you are paying to it. So even though it's 15 minutes, even though it's 15, as small as that 15 minutes is, if you are dedicated, like you take it serious, pay attention to it, do the right thing. Every time you want to use that 15 minutes on your chat, come to the chat and do what you are supposed to do. That same 15 minutes, if you are supposed to journal, do it. If you are supposed to review, do it, and do it with seriousness. Not just you doing it, you are on your phone, you doing it, you are no. If you want to do it, in fact, then there was a time I even set rules that yeah. I think that was what I even sent to my Discord. So I sent it to someone, the person was laughing. Like I had to go back to my journal. I was like, I should not touch my phone until 10 a.m. That was like I set the rules there, right? Because every problem, for everything you are going through, you should set a rule to help you, probably stay disciplined to that thing. So, because I was kind of getting distracted with social media then, so I have to set, don't touch your phone until 10 a.m. So between that 6 a.m. I wake up to 10 a.m., I won't touch my phone. And I get up to do the important thing. And I see that time, I work out that time, I analyze that time, I read books, I pay my 100% attention without touching my phone. But if there is any reason why you have to touch your phone, I'm not saying you should not. I'm just giving an example that I have to set my rules for me to. If it is you setting your rules that you shouldn't be on Twitter or Instagram from so time, just do it, right? Just set that rules and do it. So, I'm just trying to tell you that I'm teaching you how I see the market, but at the end of the day, the people that will make use of it will make use of it. Tim, you are allowed to speak, Tim. I still have about 5-10 minutes. Tim, you're allowed to speak.
Thank you very much.
You're welcome.
Okay. Yeah. So I want to ask regarding the matter of order block. There's some other blog that will see that they got mitigated, but actually, if you look at it, it does not.
Please, Tim, I'm sorry, please. I was distracted. Please just repeat your question. Start again.
All right. Okay, so I said I want to ask regarding the matter of order block. There are some other blog that will see that they did not actually sweep liquidity, but they got mitigated.
Yeah.
Can you hear me?
I can hear you. Yes.
Along the line, you just see yes, the price actually came down to mitigate them. But if you look at it deeply, they didn't actually sweep liquidity.
Yeah.
That's
it's not. Maybe the time frame you are looking at, it might not really. When I was trying to do something here, I said it swept liquidity, but it was not really that clear from that place. I had to go to lower time frame, and I saw that it actually swept liquidity, which is this high. I've said it that liquidity is not everything. This thing you are seeing is liquidity. Is liquidity. Is liquidity. Is liquidity. Everything is not liquidity. Is not just about something like this. Even all of this small what you are seeing, even this one that price took is liquidity. So number one, it could be the if you did not see it clearly that it swept liquidity from, just try to go to more lower time frame and see if it swept liquidity. Why sometimes some other block will not really sweep liquidity. Like I think I saw an example there. Uh I'm not sure. Maybe it's from here. This one even swept liquidity. Now, I'm sure that the person asked the question. You might say that this other block here, maybe it did not sweep liquidity. But to me now, this one swept liquidity. So far it swept this high, it is a sweep of liquidity. This high that it took as is swept liquidity. You understand me, right? I don't know the person that asked the question.
Yes, yes, team. Yes.
Yeah, so trying to change the time frame and see, you see that it actually took out liquidity from previous candle. It might be a previous candle. It might just be one single candlestick. Emmanuel Galaxy,
All right.
you are allowed to speak, Emmanuel.
My
You are
second
welcome.
question. Sorry, my second question.
Okay.
Sometimes you guys still on the matter of other block. Sometimes you see maybe okay, this other block actually got mitigated. Then it was a week that mitigated. So below that week now, you see another other block, a good other block. It has fair value gap, it has everything, but it did not happen that week. So that week now is if you pick that week as a zone, price may not actually get to that week, and it will take the other block below it. And sometimes if you pick the other block below it, price will go for the week. Do you understand my question?
To be honest, I don't understand. You mean if you have two other block and
Yes,
one was mitigated with a week, and then correct?
yes. If or do we go for chart example on ETF? It's already on ETF USDT.
ETH, Ethereum.
Yes, exactly. Perfect
Okay.
example.
All right. Oh my God, I did not check this again. All right, I can hear you.
So if you look at the current price action now,
Mm.
if you see that week above it, if this week that place that you please zoom in on 1 hour, zoom in on 1 hour time frame, just zoom into the current price action.
Okay, 1 hour. Okay, I'm on 1 hour now.
Yeah, zoom in, please, to the price
Okay.
action. The where price is
Mm.
actually trading from right now. Okay, so if you look at it now, you see price add this week up there that actually mitigated at least the high now. Can you see? Do you understand what I'm saying?
Is it a buy or a sell?
A buy. So they
So
sell.
is it this week?
Sell. They sell.
This week?
Not down. Why is our chart different? This sorry, please
Your
go
chart
to
is
the
different. Okay, let me use Binance. Wait, let me use another feed. I think this feed is used to show nonsense.
ETHUSDT.p perpetual.p
Dot what?
.p.
That's the perpetual. Okay. All right, this is it.
Please go to just zoom in close to that price action, the place where price is starting from. Zoom in close, very close. Zoom in again.
Okay.
Zoom in. Yeah. Another zoom. Sorry.
Ah, okay.
So, yes. Now this week, yeah. This high that
The
price
place prices now this week.
This high that price painted around 3,900. The price that price the high that price painted around 3,985.
Are you sure 3,985?
The high.
There's no 3,085 here. Which, oh my God.
So
Can you just draw it and send it to my DM?
let me explain it. Let me explain. What I'm trying to say is that there are weeks when there are proper weeks that
Mm.
okay, you know price will come and actually mitigate it, but below it you hit another block. So now price sometimes if you want to take that week, price will take the other block instead. And if you want to take that other block, price will take the week above it. You understand what I'm
This
saying?
one, the way you are saying, if you want to take the weak price, as if you know, as if price is not what you want to do.
I'm telling you sometimes.
It is not about. It is not. It's not just about. It's not just about. It's not just about you. You are trying to attach. You are taking it personal now. No, you don't. You don't take it like that. Like you. You don't see. You don't read the chart that way. The one that price took the week out before coming for the other block, and the one that price came for the other block, however that you are trying to say, probably there is a reason for it. I wish I can just get the example of the one you are trying to show me here on ETH. But I guess let me look for an example myself. Maybe I will understand what you're trying to say. So price took out the week, and anytime you want to, that is when price. Let me say, let's assume that you are trying to buy, and then this is a week. Let's say you are trying to buy. I want to buy from here, and this is a week, right? This is a week. You want to buy from here. So price now came back, and the price now tap into the week and buy, right? Without getting to the other block. Is that what you are saying?
I've sent it to you.
Okay, I've sent it to me. Let me check.
Yes, from there.
Okay,
You
so
see,
what now happened here?
you see that other block, where price mitigated. Sometimes, properly now, if on normal look now, it's that week price supposed to come to that week. At least price supposed to come to that week. But instead, it mitigated this other block.
So wait,
Now,
you are trying to sell, right? You are trying to sell, and this is the place you want to sell from.
the one above it,
Okay, the week. Why will you sell from this week? You see, I used to say this thing, right?
Like, I'm with you.
Okay, I can hear you.
Why I want to say above it because I see it was one that mitigate the eye up there.
No,
Uh,
no, 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 no. You see, don't lie me. No, absolutely no. 60 minutes, right? 30 minutes time frame. I guess let me look for the one. Let me. Why is it I can't find it? Why is it different?
one is on BTS.
Please give me 1 second. Give me 1 minute. I'm coming. 1 minute.
It's on BTS.
Hello, ma. Rárá, mo ṣe nǹkan lọ́wọ́. I'm sorry. So I'm trying to I'm trying to look for the
ETH USDT on BitGet. ETH USDT on BitGet.
I need to I am interested in this thing because I have seen BitGet.
Yeah,
.p again
yes, ETH USDT dot P that shows BitGet.
on BitGet.
Yeah.
Okay. All right. So you were trying to
Yes.
no matter the price is still different, sef, no matter what. But price when did this thing happen? What day? When is it recent?
Yes.
Oh,
What's the call?
you don't know. I'm using a bar replay. God, I didn't even know. Okay, this is it. This is the price action. So you were trying to sell. You were trying to sell from here, and price now sold from here.
Yeah.
If you this is if you understand this thing, why will you sell from here, sir? What do you see there? Let me go to 30 minutes. Is it I don't like this thing price has tapped into it like even 2 times sef. See, even though price come there and sell, me I will not sell from there again. See, let's go to 15 minutes. See, can't you see that price has tapped into it? Even the other block, This is first tap, second tap. See, we even swept liquidity and we took out the low. So this is the mitigation, the next one, that we swept liquidity again. I used to see people do this week of a thing, like you don't pay a easy candlestick. This is a very good entry. See the order block. See this red order. This is red candle. Is the order block. Is the last buy. That is where price tap into it. See the order block. See inducement. This leg here was the one that now broke the low. This is the entry. So this week is out of the whole thing. It is not. That is not how to choose a point of interest. I can't even wait for price to get there. You understand me, right? Look at the place that price is currently selling from. Look at it. When we continue buying, we had the first mitigation, we had the second mitigation, we had the third one. We can see eventually we took it out, right? We took it out. We broke below the low. So this is the order block that sponsored that break of structure. You can even see an inducement. So why are you paying attention to here?
Sorry.
You understand me, right?
Yes.
And you can see now we are buying from this demand. We bought from this demand. So on a norms, that demand was supposed to continue the buy to take out this high, but we didn't take it out. So this low is a weak low. It will get taken out because the mitigation of this demand did not break this high.
Thank you.
I even thought maybe that thing I saw there was the present price action on ETH before, because I was looking at selling ETH from somewhere around the last buy. Oh, I didn't even know where that is. Okay. I think there was the kind of a resistance zone, yeah, that got taken out. So you can see we tapped into the demand that took out the supply. Inducement. In fact, to choose your inducement, I wrote a trend on this thing before. For those that be following me, says how to choose the inducement based on mitigation, like first, second, third. Look at this place here now. Look at it here. Let me use a bar replay from here. Look at what happened here. We had price tap into this. Price tap into this. Right? Now, this one, price tap into it. And then you can see our price. Everything has been tapped into. This is the order block that price came to tap into. The extreme. This was the last sell candlestick before this upward move that broke the structure. Now, all of this order block you are seeing inside of here, they have been mitigated. So they became liquidity. If the zone has been mitigated, I don't take entry the second time from it. Even though price later buy or sell from there, I don't really care. These are just some of the rules that I don't joke with. If a zone has been mitigated before, I have no business with that zone again. My entry is always from a fresh, unmitigated zone or candle. You understand me, right? So that place you are showing me now, I see nothing there for you to take a trade from. Absolutely nothing.
All right. Thank you.
All right.
Wow.
So,
No, thank you. It's all right.
I'm getting tired. NAS, NAZ, NAZ. Are you there? NAS, are you there? All right. Let's move to. Let me take in one more. What is this? Oh my God. Walco, right? Well, yeah, unmute yourself. You wanted to say something now.
All
Okay,
right.
Nas.
All right. Can you hear me now?
Yeah.
Okay, my question is not really on what you said. I understood everything you said. Just that I came to know about this book just this week. So can I have access to the previous videos?
Sure, you can. Yeah, please. You just have to send me a DM.
All right. Thanks very much. That's all.
Yeah. But okay, after that I'm going to like make the say something about that. Anything from I'll stop by 11. So let me take in one person before the 11. Alexandra, you're allowed to speak. Alexandra, you're allowed to speak. Alexandra, you're allowed to speak. Triple A, you're allowed to speak. If I call your name once, you know answer. Okay, promise, you're allowed to promise. Promise, are you there?
Hi, good
Okay.
evening.
Good evening.
Yeah, I want to ask how you go about sticking with risk management because I think that's the only issue that I have now.
Risk management is something that is very, very. Please off your video. Who is that? Risk management is something that is very, very unique. I will put it that way. Like it should be something personal. There was a time I posted it that there is no rule because I got a book. I was just checking the review of that book. It's about Intelligent Investor by Benjamin Graham. It's about he's Warren Buffett student, and he was talking about investment, and there was a last place I saw something about risks and all of that, and that was when I get to understand. I see this risk management of a thing. If I decide to go and risk 5% on a trade, it doesn't mean that I'm over risky. No, it is something that it is about your risk appetite. There are some people, if they lose just $1, it will be as if the world wants to end. But even some people, if they lose that $1 and then like me, like even though they don't have much and they ended up losing that money, they don't really care because the way I think, because if I can lose that money, I believe that I can make it back. That is how I see this market. If I lose $500, I always believe I can make it back. And then before I start increasing my risk, I I I take some step. I don't just wake up and increase risk anyhow. No, I don't just and my risk is I am somebody that I love to stick with consistent risk. I don't do you can never see me talking about A plus setup, B plus very, very weird. You won't ever see that. I don't do that. Right? Some people A plus setup they reach 1%, B plus setup they reach 0.5. What is it if that B plus setup that now it's TP? That A plus setup with that hit SL. Right now, if I say I don't do it, doesn't mean you shouldn't do it. Right now, I've always said this that everybody we are unique. Trading is a personal journey. Same thing with risk management. So in that book, it was talking about you taking up high risk, low risks, and then medium risks. Now it is just about you understanding your appetite. Like there are some people that they can they can risk, and this thing still drive down to source of capital, source of money. They have access to risk and they just risk it, and then if it goes good, if it doesn't go, imagine somebody risking $500 on a trade. It took a trade 3 hours, $1,500 I got out of the trade. The next trade, the person now decides to risk $1,000. The trade now goes against the person. The person is back again to the initial capital. The next trade, the person now took it, same $500, and then if you're not consistent with your risk, you keep going up and down. Like when something is moving like wave, you keep going up like higher high, higher low. You keep going up and down. And sorry, not higher higher low. When your equity, I mean your equity curve should always look like uptrend, not downtrend, uptrend, downtrend, uptrend. No, if you are consistent with your risks, right, it is going to help you. I mean, sticking with just one rule. Now, there are 3 types I gave, right? I'm going to give it out to you guys. It is not something that I have to hide. I gave it out to when I was having risk management session with these guys then. So I'm going to copy the image. Where did I put it? 6 months. So I'm going to copy it, and then it's something I just talk about risk management, and then uh coming. How will I get this thing?
Thank you, man.
So I'll drop it so you see what I'm trying to say. I can't really get it here. Let me get it from my Discord.
Let me
I'm coming. So,
Thank you.
coming. I want to say something now. You can stick with any one of them, but one thing I will just try to tell you is don't risk $2 today and tomorrow you use $7. Except maybe you are doing compound. Even that's why all these compounding things that I used to see all this image. They will be doing compounding without considering the loss. What if they will be doing compounding today you lose $20, tomorrow it should be $40, next tomorrow. What if you now lose? They will not put losses there. It's only the win-win they will be doing compounding for. So um let me drop it on the channel. Let me drop it on my Telegram channel. Where is it, sir?
Right.
Okay,
Yeah, appreciate it.
you're welcome. So you can pick any one of them, and there are some points I marked out there. I say rules to risk management. You need to understand the first thing you need to understand your risk appetite. And then if you want to increase your risk, don't just increase like me now. When I said I'm risking 1%, I did not start by risking. In fact, there was a time I used to risk 0.25. I did not just start by risking 1%, but now the stage I am now, the stage I would say the stage I am now, I can comfortably. It is not about money, it is about the knowledge, the kind of understanding of the market, the kind of discipline I have now, the way I see the market now, I can comfortably risk 1%, even though I think the first trade is a loss, the second trade is a loss. I will continue risking it because before I increase my risk to 1%, I did a lot of work. In fact, I did a lot of work, so I have to go through my journal. Can I do it? And I saw that yes, I can do it, and I did it. That's why I say you just have to give it a try. Everything is about trying. You just have to try it and see. Will it work? Yes, it work. If it's not work, then you go back. There is nothing bad there. So can I do it from everything? Yes, I think I have the mindset, I have the discipline, I have the knowledge. Let me do it, and I did it. So since then, I have stuck with my 1% per trade. Even though I'm trading $10,000 account now, I am going to be sticking to that 1% per trade. So can go back to that. So all right. Is there you want to ask another question, Nas?
Good evening, ma. You called my
Yes,
name
I wanted to
before.
ask a question.
Wait.
I have the question.
Wait. Or just hold on. And let me start from Alexandra. Can you hear me? Then after Alexandra, promise.
Yes, I can hear
Alexandra,
you.
can you hear me? Yeah, you can ask.
Okay, thank you. Good evening. My
Good evening.
question is on your trading day, once you open
Um,
your charts, what's the first thing you look out for?
on my trading day, once I open my chart, what's the first thing I look out for?
Did you get
Is that your question?
yes,
I just do top-down analysis. There's nothing like
that
I
is
do.
it.
I start from the weekly to the daily. The weekly. Are you seeing my video? Are you seeing my screen? Are you seeing my screen?
The, the
No.
screen is the video is paused right now.
I
It's
don't know
not
why it
playing. No,
is
I'm not seeing
paused.
it.
Okay, it should be playing now. Okay, let me stop
Just go
sharing
back.
and I'll
Right.
share again. Are you seeing it now? Let me use yes,
Okay now.
Yes, I can
Can
see
you see
you.
now? So
Yes, yes.
Okay now.
Jesus. Hey my god. Alright, so you can meet yourself. So I start from the weekly. I am somebody that I think the last class we had, this was what we talked about. We used GPP USC as an example. Look at it from the weekly. So I usually start from the weekly. So I was telling them that if I'm to trade this GPP now, because I don't really trade it again. So if I'm to trade it now, look at it where price is coming here. You can see this other block, the last set candlestick before this support move that broke the structure. This is the other block. You can see that the other block failed. Price was trying to buy from the other block, it failed. Leaving the fair value gap. Price tapped there last week. We tapped there last week. We closed as a doji candlestick. Now, doji candlestick indicates two things. One, continuation of a trend. Two, reversal. Now, if price goes with there is a high probability that the next candlestick might be like a bullish engulfing, or we had a reversal. But since we are coming from inside of what? Inside of this fair value gap, a bearish point of interest, and it's aligned with this bearish order block that failed. And then you can see, even though we are coming from a demand, some people will be like, we are coming from a demand, we are buying. Yes, we can buy, but here on the weekly time frame, two things are involved. Previous week low, previous week high as liquidity. But here, there is a high probability we take out the previous week high before we sell, because you are coming from the fair value gap. Now, I already see, I'm predicting the next week candlestick to take out the previous week high first before I sell. That is going to see, because I have a bearish point of interest and I have a reason to sell. We are still very bearish. Because price, I used to say that because price tap into your demand does not mean price has to buy. Even you are taking this as a break of structure on the daily time frame now. This is a recent price action. You are taking this as a break of structure on the daily time frame. Price came inside of here. This other block swept liquidity and it broke above this high. Right? I can see that you are seeing that as what? As a continuation. Now, this is me based on the way I see the chart. I am seeing this as a range already. Now, all of this bullish price action is happening from where? From the discount. A point of interest from the premium will not be bad. This is a point of interest, which is what? A fair value gap that align with that other block from the weekly that I talk about, right? Look at it here. Now, if you should always, you should understand the reason. Now, Friday close, still have Friday close. Let's see. The first thing now is that, let's see if price is going to take out Friday high. Right? Why am I selling? Now, the place I'll be looking to take itself from is inside an order block. Let me check, a liquidity, sorry. Right? Let me check it. Now, look at it here. Now, very, very good. This price action here, this is what? A sweep, a break. But here now, I am seeing this based on this time frame now. I am not seeing this as a break of structure. I am seeing this as a manipulation for now. The reason is because immediately we took it out, we had a reversal. Because from the daily time frame, it is actually a week. You can see we had a week close. So I am seeing that as a manipulation, not a break of structure. So this low is going to become a sell side liquidity for now. But if price is going to continue the buy, no problem, because price can still come inside of here and buy, no problem. This is when I will now start putting my days into consideration. So the first thing I'm going to expect price to do is to take out Friday high, if you are going to take it out. Let's see if you are going to take Friday high out. I'm sorry. So now we did not really take out Friday high. We started respecting Friday high. We protected Friday high. We tapped into this and then we sold out. Now tell me, this demand here, in fact, from everything, this is one thing I used to say that I don't really like to do all of these things. Look at it here. We had a tap inside of here, and then yeah, you can see that is the area price came into. We had a tap inside of there too. So let's go to like lower time frame, and then the only place some people will be looking is going to be here, right? Maybe, I don't know. They might actually see that as a point of interest, but me, I don't see that as a point of interest. But some people might actually see that as a point of interest. Now, the reason why I said I don't see that as a point of interest is that if you are to go to higher time frame, as you are moving to your lower time frame, consider your higher time frame. If you are to go to your higher time frame, look at this candlestick. You can see that it tapped inside of the body of this candlestick. We had a tap into it before we pushed to the upside. Then we came back here, we tapped into it before we pushed to the upside. We swept liquidity, but we did not break structure. We didn't break above this Friday high, right? We swept liquidity, we tapped into other block, but we didn't break above here. Instead of that, we took it out, right? Instead of that, okay, we didn't even take it out, but this is a weak low. This low did not break above the high. It will get taken out already. It will get taken out. So this happened on Monday. Then Monday, let's assume we don't really trade on Monday. Now all of this is now happening on Tuesday, right? Now you can see this will definitely get taken out. This is point of liquidity. You should be looking to sell to take this low out, right? That should be what you should be looking at. Now, eventually we swept it. However, some people might actually take the buy from there, but the structure here is trying to show that price wants to reverse back, and you can see everything is happening from the premium of the range. It is not, and everything is happening after we took out this internal range liquidity, this high here. And I've said I see this as a manipulation of the breakup structure. And I said that I have seen everything here, that everything here has been mitigated. Whatever price is tapping into here, it is just to give a pullback to continue the sell. Everything here has been mitigated. So the place we are there, and to fill gap, we have a gap from here. So we are going to be having a new range from this low to this high. Right? So now you want to take a sell from the premium of this range and the premium of this your main range from here. So you can see that on Wednesday, I want you to now look at the day. On Wednesday, why do you think all of these things started ranging Monday stroke Tuesday stroke Wednesday? So absolutely, that is why price came here and took out a high. And I didn't really trade it, but I saw the price action yesterday, and you can see price tapped there on Thursday 8 a.m., which was the high of the week. But we tap inside of using that as an this thing. So price is coming to take out this low as a sell side liquidity, because this low did not break structure. This low only led to manipulation of this high, and from the range, we are coming to retest the discounted area and to fill gaps from here and to clear all of this push, all this one. Yeah, I just see all of that. I see it as this. So I see them as what? As a bunch of liquidity. I don't really see a point to buy from. Even though price is going to buy from any place from here, I'm not interested in it, to be honest. So that is how I get to see my chart. From the weekly, I start from the candle to the daily. I started looking at the structure. When I get to lower time frame, I focus on more on the structure and range. And when I get to more lower time frame, I started considering the days of the week to know my entry, something like that. So there is the last session we had was on top down analysis, so the video will be available on top down analysis. So I'm going to take in one more person. But no, that is for Spencer. Okay, let me just I promise. Yeah,
Yes,
welcome.
ma.
Promise. Ask a question.
Okay, but I do trade demand and supply, but I've been noticing that anytime I get to my supply, it will just go and hit my stop loss before it will not do what I ask it to do. I don't know
Okay.
if it is my
That means
is it my
you are
entry or
choosing
what?
the wrong supply.
Okay.
You are choosing the wrong supply. No, no, PC.
Okay.
Sorry, you are choosing the wrong supply actually. So price as usual as liquidity. So all those things that it has hit your stop loss before it moves to your entry, gather all of those images and try to look at it. Go back. Next time, this thing is just all those images, all those pictures, all those diagrams, all those charts. You should have a place you be keeping them definitely, right? Like a loss, a journal. Not really like it can even be just open a channel for yourself on Telegram and keep all of those things there. Then go back to it. Like during the weekend, what do? Go back to it and see this one that there was a time that I had to go because I saw this man, this man that wrote this book, Best Loser Way, Tomugad. So I usually attend his live this day because he trade US30. Then I was trying to learn to trade US30. So I started researching on people. So I saw that he trade US30 very well. And I saw a book. He just brought out the book from the chef, and it was printout of charts. I mean, every week, every end of the week, this man is going to print out the weekly price action on US30. I mean, a paper, print it out like a printout, and it's so plenty. Only God know since when he has been doing it, but it's so much. Then I started printing it out. I started printing my charts. I would look at this chart and compare it with this chart. My same chart, this one that ended up as a loss, this one that ended up as a win. What happened? Right? So at the end of the day, I stopped printing. Then I started using split screen. Your trading view you can split your trading view screen. Let me do it. This is, I don't know, maybe it's on premium share, but this something like this. Right, you can split. This is GBP USD, this is Euro card, because I'm using a much more bigger screen. So this is, you can split your screen, then you try to I I used to come even on my Discord when we have a session. They used to see the way I compare things, because this thing is about something that works. You want to repeat something that works, right? That is why you are doing this thing. So there was a trade I took on GPPJPY. Then we saw that same price action on one pair that I have forgotten, and then I screenshot it. So I'm going to look for it on my Discord. I think I put it in. No, I think it's in study room. I'm coming. Then we okay, very good. This is how I used to like. You know, you are going to get good if you are determined. You can be the best trader. You can be the best trader for yourself. I don't really believe there is any best trader in the world. You can only be the best trader for yourself, because in this thing you want to make money. So I don't really want to know who is the best analyst. I just want to make money. Okay, no problem. I think I dropped it on my Telegram channel before. I'm not sure, but let me drop it on the channel. You guys can see. I think I dropped it before. I'm not sure. This was like a session. I was trying to explain the sell on GPPJPY, and you can see same thing happened on Hero HUD. Hero is not even like. Please mute your mic. Please. It's it's not even like a pair I trade. Hero HUD. So you can see very similar from the place the demand failed, why it broke, same thing with it. So this was, I split the screen and I did it. So and you this is how you get to improve. You don't just take trade after the loss, you just throw it one side. See, if I take a trade and it ended up as a win, I can look at the picture more than throughout the whole day. If it ended up as a loss, I can look at the picture for throughout the whole day. I always says this thing that is why you have to pay attention when you are studying, when you are trading, or when you are backtesting, even when you are trading. If I see a particular price action, I can easily connect it back to something that has happened before. Because that whenever I'm doing something, I put my 100% focus in it. I'm telling you that some people, it might even be as simple as paying attention to things that will solve their problem. They don't really pay attention. They just because you sweep liquidity and break structure, they don't pay attention to where price is coming from, where price is currently now. Why do you like where is the place that price might go? It might even be that price is coming for the low, but because of the sweep and break and the demand that they saw, they started buying without really paying attention to the whole overall structure where price is coming from. So if you know that you don't really have this tendency of like you don't have this thing to pay attention to a lot of things, cut down your pay. Cut it down. 2, 1, 2, at most 3. Trading one pair, trading I've come to discover a lot of things. Trading one pair can make you a lot of money. It is not about trading thousands of pairs. No, absolutely no. Even with your higher time frame, trading just one pair, if you know what you are doing. So guys, I'm sorry,
Please,
everyone.
I don't know if you can answer my question, please.
But you have asked question before now, Williams. What do you want to ask?
Yes, just please. We are talking about mitigation. So there's this buy I want to buy from SRP. I don't know if you can check it out. Just for a minute, I beg.
Don't ask me for what SRP is going to do.
No. It's just that I don't want to miss on the buy because you are talking about mitigation. So I just want to know if that point has been mitigated already.
Which one?
The buy from the yes, this current price action, it tapped into that
Where?
demand zone and it broke.
This place, it has been mitigated now.
Okay, I was
Where?
even waiting for it to come down and take out that low, so to buy from that fair value gap. So that was how.
Okay. You see, in this kind of market situation or big condition now, price coming from here is not something that I know that probably you are using this kind of fundamental because of what they are saying about XRP, right? Well, right, but based on the structure, look at this eye. I want you to look at this eye, and this low. These 3 things, I want you to look at it. Now, this price came inside of here before we sold down and we broke below this low. So we are trading within the structure, internal structure. So we are bullish because we broke structure to the upside from here and we broke up of this side too, like internal backup structure. So we have mitigated this demand, and there was a supplier that failed. That was what led to the demand. We mitigated it. So the thing there is that the supply from here can actually be respected, and the supply from here can be respected to just cause a pullback. Now it not depend, because this is not a pair I trade. Currently now, I'm not going to do anything. What I'm going to wait for is there is going to be this kind of reaction, which price is currently giving now, kind of little bit of reaction, and then a break. So when price sell from here, that reaction will now be the inducement into the buy. I want to see that inducement clear, because the reaction is currently happening. I'm sure that some people know we're having sweep, and then we are coming from a supply from here, something like that. I want to see that reaction, and this extreme here, there's going to likely be a sell from there, because there is another block from there, and you can see it broke structure. When I mean it broke structure, it broke below this low. Let's go to 4 hour. Maybe we're going to see something. Yeah, like there is another block from there, swept everything very clean, and it even has an inducement this high here. So this is what I'm trying to say. That's if it's going to buy. But if this did not happen, then that means that price might likely sell from here. But this is what I'm going to wait for: inducements. Then this. If you want to use the fundamental to match it with the technical, something like that. You understand me, right? Okay, I believe you understand. Um, okay, guys. Please,
Yes, yes, sir. Thank
guys.
you. Thank you very much.
All right.
Please, can I
Oh,
DM you as well for the, because I don't have chance to attend. This is my first time
yeah.
attending the session for the boot camp, so I
Crypto,
don't know if
yeah. Crypto style. You want to say something? Crypto style. How are you doing? Crypto style. Crypto style. You there? Crypto style is not saying anything. Udo, Emmanuel Udo. Dan Emmanuel Udo, are you there?
Yes, I don't know.
Yeah, how are you doing?
I'm fine, man. Please, ma, I want to ask a question regarding when the market created Nigerian liquidity, like if there's like two Nigerian liquidity.
That place is noisy. Oh, please, Emmanuel.
Can you hear me now?
Okay, I can hear you. Yes.
I say when you come to a point where the market created Nigerian liquidity, like 2 places close to your point of interest, how do you work with that? Not just one single Nigerian liquidity, like 2 places close to your point.
If price give you an engineer liquidity into your point of interest, right?
Yes, like two places.
2 engineer liquidity.
Yes.
I seriously don't understand. But let me draw out what you're trying to say. 2 engineer liquidity. If you are trying to buy from this low, maybe price now engineer the first liquidity, price now came engineer the second liquidity, like this.
No, not this.
Is that Emmanuel?
Let's go near that motor. I was want to do that motor. That motor is sharp.
Emmanuel, please. That place is noisy. Which of the is Emmanuel Udo same as Emmanuel Galaxy? Oh my god. There are 2 Emmanuel that is speaking here. Who is speaking now?
I'm the one speaking. I have the question.
Emmanuel Udo.
Yes, ma'am.
Okay, you are the one talking about engineer liquidity.
Yes, ma'am.
Wait, are you using 2 accounts to join the Emmanuel Galaxy? Mute your mic. I think they are 2 different people. Emmanuel Udo, you can speak now. Are you the one talking about 2 engineer liquidity?
Yes, ma'am. I'm the one that has the question.
Okay, so you said, is this diagram correct? Like if price engineer liquidity, let me say you have a point of interest from here like this, and price come here, engineer liquidity into it, and price came back again, engineer another liquidity before price now buy. Is this what you're trying to say?
Yes. How do you work with that?
How do I work with that? Or How do I work with that? Is that what you said?
Yes, that's what I'm saying. How do you work with it?
In this kind of thing now, this one is not really about general liquidity anymore. If price give you a point, if you have a point of interest, and then if this is the demand and price came, engineer liquidity, and then it engineer liquidity first time, we came back again, engineer another liquidity again, probably not tap into it and we buy. So this is just price giving inducement. I will just see it as, price is trying to induce people the first time, the second time. So there is nothing not to work with. It is just you just have to set your limit at the demand you want to at the demand you want to set you want to buy from after the first engineer liquidity has been given. And you see that the second engineer liquidity did not really tap into it. A price mark came the third time, good and fine. So if the second engineer liquidity did not come into it and price buy without tapping into it, then you have missed the entry. But if the second engineer liquidity did not tap into it and price still came back the third time, then you just have to set your work with the point of interest that you mark out. That candlestick that you want to buy from is what you want to work with. And if price are giving you engineer liquidity, set your limit there or wait for price to get there if you want to use instant market execution. I'm tired. It's 3 hours already. So that would be there are still 1, 2, 3, 4, 5, 6, 7 people. It's still but it's much. It's much. I don't know what um Young FX, are you there? Young FX. What did you know? Young FX, are you there? Okay. I guess that will be the end, guys. That will be the end. Next time, I will try to host weekly session these days. No? I've been kind of, Jesus. I've been kind of running away from Saturday weekly recap that we usually have before. So I'll try to resume that by next year. Yeah, by next year.
Next.
So, next year is just 3 hours, 3 weeks. I've been 2 weeks now. Next year is just let's go. Next year is not far again. So, that will be all for now. That will be all. I've been sitting down for like 3 hours. My back is spinning. That will be all. So, see you guys next time.
Look,
And then,
I've
yeah,
sent you a
I
DM
wanted
as
to
to
say
the video.
something. Yeah, that's what I wanted to say. So, if you